consumers revolt to make this reverse. 10% of the oil supply of the world comes from Russia. So if Russia were unable to sell oil to China and India, hypothetically, there would be a shortage and then the prices would go up. So that is something which will affect the US also amongst other countries. So I think President Trump's decisions are short-sighted, to say the least, and it is going to have an impact on the US economy, and the poorer people of the US will suffer the most.
Well, those were some big voices sharing their opinion on the tariff talks between India as well as the US. But on that note, let's slip into a very short break. Up next, we tell you how these overnight cues impact our own Indian markets. Stay tuned.
Welcome back. Most of the Asian screen is showing a tinge of green, and most of the other markets as well. Look at the Taiwanese index, 2.25% higher, and the Hang Seng 2 trading with gains of around 0.3%. The Nikkei is up 0.7, the Kospi is up 0.6. So a positive move across the Asian markets this morning, and the implied open or the GIFT Nifty has recovered from the lows even further now. 40 points lower is what the implied open is suggesting compared to the earlier ticks that were showing an 80-point downtick. But our research team is here to set you up for the trading action today, the stocks that you need to keep an eye out for, and of course the setup on the FNO side of things as well. Firstly, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. What's on your radar?
Well, good morning. It's going to be another action-packed day if yesterday wasn't enough. While we're looking at the handover, positive handover coming from Wall Street, oil prices cooled off over 0.5% last evening. But remember, all eyes will be on the Indian market given the fact that there has been an additional 25% tariff, and look out for the whole host of sectors that will be impacted. All of the exporters, textiles, capital goods, automobiles, all of these companies will definitely be impacted in today's trading session. Yesterday, you did see the Indian market end in the negative territory, but significantly off the day's low, led by the large cap recovery. The Nifty back, in fact, managed to end with marginal gains. Now, what is it that we will be watching out for in today's trading session? Remember, domestic specific cues, a couple of important blocks, Eternal as well as Kotak Mahindra Bank are expected to see large block trades. Result reactions, results that came in post-market hours. Some key numbers included Trent, Hero Motor, BHEL, and quite a lot of important results today as well. BSE, Cummins, Godrej Consumer Products, Titan, HPCL, LIC India, all of these companies, quite large names, will be reporting their results today. Like you mentioned, Asian markets are showing a tinge of green. However, Indian markets, while they are showing a small gap down, may see quite a bit of a sell-off in the rest of the session today.
All right, Vivek, thanks a lot for that. We'll monitor how the situation pans out from here on. But a bunch of stocks which will be on our radar. Ria has the list. Ria.
Well, good morning. Let's take a look at the stocks that are going to be in focus today. First up, all eyes on Eternal, that is Zomato. Sources say that Anfin Singapore is likely to sell 1.9% equity of the company via block deals. This is going to be a clean out trade, and the floor price is at a 4.6% discount to yesterday's closing price. For Kotak Bank as well, sources say that one shareholder is likely to sell about 2,066 crores worth of shares of the company via block deals, and the floor price here is at a 2.4% discount to yesterday's closing price. Moving on to the earnings that came out yesterday for Trent, the net profit has been well above the estimates, coming in at around 425 crores. EBITDA margins also healthy at 17.3% versus estimates of about 14%. For Hero MotoCorp, net profit has come in at around 1,126 crores in this quarter. Revenue has been a little bit below estimates at 9,579 crores. For Solar Vineyards, net profit has seen a decrease of around 87% on a year-on-year basis, although the revenue has gone up by around 7.8% compared to Q1 of last year. For BHEL, the loss has come in at 455 crores versus a loss of around 211 crores in Q1 of last year. Revenue has come in at 5,489 crores in this quarter. For Hudco, the net profit has seen an increase of around 13% on a year-on-year basis, and the NII has gone up by 32.6% compared to Q1 of last year. Moving away from the earnings, Credit Access Grameen is going to be in focus. They have appointed Ganesh Narayan as the MD and CEO of the company for a period of 5 years. This is going to be with effect from the 5th of August. And lastly, Bharat Forge is the one to keep your eye out on. They've entered into a BTA with KSSL for the transfer of the defence business assets for an amount of rupees 453 crores.
Well, thanks for that comprehensive list, Ria. And finally, we now have Sudarshan joining in with cues from the F&O space. Good morning, sir.
Good morning, Momaxi. So yesterday, reacting to RBI's status quo policy and ahead of Trump's tariff order, it was not a bad day of trade. Market saw big recovery from intraday lows. It was for both Sensex and Nifty, and that was supported by financials. And at the end, we saw Nifty Bank closing in the green. But there was a bit of pressure in the mid-cap index, which saw a cut of more than 400 points. What about today? If there were expectations that GIFT Nifty would indicate a sharp downtick for the market, well, there is a recovery from opening lows. At the opening, GIFT Nifty was indicating that market may open with a cut of around 80 points, but currently it's down around 40 points. So, market is expected to open near flat line. As far as flows are concerned, on a regular basis, we are seeing that whatever FIs are selling are being offset by DIs. Yesterday, also in the cash market, FIs have sold nearly 5,000 crore. It was fully offset by DIs, which have bought more than rupees 6,700 crore. In the index futures too, we saw minor buying by FIs. They have bought around 340 crore, and just they have added long positions of around 220 contracts and reduced short positions by around 1,500 contracts. But FIs long exposure remains around 9%. On the option front, action remains between 24,500 to 24,700. That's the reason support for Nifty remains around 100-day moving average, that is 24,450, and resistance remains around 24,800. Stocks in focus, one stock that remains in the band is PNB Housing. Apart from these two stocks that may be in focus is Divi's Labs. Company had reported earnings yesterday. Earnings were weak, even commentary was weak. So we have seen that fresh shorts were added, and another pack that may be in focus is our insurance names ahead of monthly data.
Interesting list there, Sudarshan. Thank you for that F&O update. We'll keep an eye out on these key levels for the index. But moving on then, In the US markets, the Wall Street ended Wednesday's session higher. The Dow also closed higher, but the S&P 500 and the Nasdaq were the outperformers. 0.7% higher for the S&P 500, 1.25% for the Nasdaq as well, and that courtesy the 5% up move seen in Apple after it announced its plans to increase domestic manufacturing by investing another $100 billion, taking their total investment to $600 billion over the next 5 years.
All right. Well, it's ironic that, a day that Donald Trump goes ahead and imposes so many duties, the US markets do well, and the Asian markets also largely in the green, the GIFT Nifty recovering from the lows. We'll take a short break, come back, focus on all the cues from the commodities arena. Stay with us.
Welcome back. Let's get you some more highlights from the White House. Donald Trump says there is a good chance of a meeting with Russian and Ukrainian leaders following what he described as very good talks between his envoy and Vladimir Putin. This comes ahead of Trump's deadline for Russia to agree to a ceasefire in Ukraine or face new sanctions. Here is what he had to say.
Well, there's a very good prospect that they will. And we haven't determined where, but we had some very good talks with President Putin today. And there's a very good chance that we could be ending the round, ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
Well, he also indicated that he would likely nominate a temporary Federal Reserve governor soon and has narrowed down on 3 names for the position of the Fed chair. Let's listen in.
We've started the interviewing process. Scott and I and Howard, a lot of people, JD, we have some great candidates. It's probably down to 3
And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. How are the commodities reacting to all the overnight developments?
Well, the crude is really the focal point of it at all. The prices have seen a decline for a fifth straight day. The prices are trading at a 6-week lows right now. The crude inventory in the U.S. fell by 3 million barrels, and that perhaps is a bit of a support in the markets right now. But the U.S. is expected, after increasing Indian tariffs from 25 to 50% because of buying Russian crude, there could be more announcements coming in from U.S. as secondary sanctions to other countries as well. The U.S. Secretary of State also has said that the U.S. will make an announcement on potential sanctions against Russia itself. Well, that is expected on Friday. So we are far from done when it comes to tariffs. And of course, then the negotiations will begin as well. But at this point in time, it really is about some decline that we've seen in the crude oil prices in the global markets, and Street looking at on what the sanctions could come in as and whether or not it does disturb the crude flow in the global markets there. Having said that, it really is about reactions from Indian associations right now, Hormuz, on 50% tariff. It does make it not viable, not just for the crude imports for India, but also when it comes to gems and jewelry as a sector, as textile as a sector. The Rice Exporter Association also seems to be telling us that exports at these current levels is not viable. Trade does stand suspended at these levels, and it would only be about negotiations that would happen in the third week of August on what really is the outcome from there that the business will restart. At this point in time, there's a lot of edginess, even concerns amongst many of these sectors.
Take that point, Manisha. Thanks a lot for that. Crude lower overnight, but trade disrupted for gems and jewelry, textiles, as well as rice exports. With that, what we'll do is take your leave on this edition of this Power Pack Power Breakfast show, and we'll leave it to the team of Bazaar to take you through the market setup, the market opening, and thereafter the impact that could be on Trump's additional 25% tariffs on India. Thank you for watching.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you a little earlier than usual, the 8 o'clock start mark, coming to you starting at 7:30, given, of course, the developments overnight. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, as always, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. It feels like we never left work, right? Because the news started trickling in around 7 o'clock our time last evening, as soon as most of us had just reached home. And then there was no looking back. So it's happened, guys. 25 plus 25 equals 50 now.
Well, indeed. So let's get straight to the action.
I mean, it's bizarre, right? I mean, absolutely bizarre. Theatre of bizarre, but that is what it is, right? That's essentially the point. Actually, I don't have very many points to make today because, I mean, we're not going to look through the US action, etc. I think what we're going to look through is, of course, this 50% tariffs, and actually that is the right phrasing, right? I mean, I think one should try and look through this 50% tariff. So the news first, right? Tariffs on India rise to 50%, 25% additional. So earlier 25 and now 25. But the implementation has been delayed by 21 days. And that is important. I mean, it's very possible, and it's happened before, that executive orders starting 12 tonight, right? That's not happened. There's a 21-day delay. And by the way, it's not even 21. There is, of course, 27th of August. And then there is the final effective date is 17th of September. So there is time which has been put on the table, and it gives both sides time to negotiate. Gives time for India, the Indian side, to negotiate this lower as well. Now, lots of people out there wondering what is the impact on, how much should we take down earnings impact. Actually, from a stock market perspective, the earnings impact is not all that large in terms of exposure, etc. in any case. But even, sectorally speaking, textiles, chemicals, gems and jewelry, etc., etc. We know the top exporting products out of India into the US, but there's no real sense of trying to microanalyze sector by sector or company by company implication of this 50% tariff, because at 50%, I don't think anything out of India into the US is really commercially viable. There is the question of relative competitiveness. So at 25, you are higher than a lot of the peers around India. But you could have sort of figured something, right? Somebody's at 20, 21, 22, you're at 25. But at 50, there is no question. So virtually all exports to the US at that rate are uncompetitive, are not viable really. So it's not a tariff, it's almost like a trade embargo. So, and that's the reason why I'm saying that little point looking at this in terms of company by company or sector by sector in that sense, and trying to fine-tune expectations or estimates. I would say a lot can happen, and I think a lot will happen in the next 21 days or so. And if I were a betting man, I would say there's zero chance, or near zero at least, that this 50% tariff essentially is the permanent rate which you will see. Most likely, of course, we don't know how and what shape, form, what will be the give and take, etc. But most likely that 50% tariff rate will be brought lower to a much more reasonable kind of level. What can change? One of the things, I'm not going into any detail, but this just happened. I'm just mentioning this because this came last night. US and Russia. This additional 25% is because the US says, and absolutely wrongly so, that India buying oil essentially is financing the war, Russia's war in Ukraine. Well, Trump said that US and Russia, by the way, US and Russia had a long meeting yesterday. And apparently Trump may be meeting with both Putin and Zelensky next week to try and figure out whether they can stop fighting with each other, to figure out a ceasefire. So if that happens, the basic underlying reason why the tariff has been put, this additional 25% kind of disappears. But, I'm not saying this doesn't sour sentiment. Sure, it does sour sentiment at the margin, and there'll be, FIs, for example, have already sold about $10 billion in India this year so far. The rest of the region has done far better, YTD as compared to most global markets, etc. And this will, spark fears about more outflows and things like that. But even there, I would say, since this 25% was really well advertised, right? I mean, President Trump promised that there is going to be something big and it's going to come in 24 hours, and it's come. So, I mean, promises made, and in that sense, unfortunately, promise delivered. So it's well advertised. You look at what the rupee 1 month, NDF has done last night. Not moved very much, 87.85. It briefly went to about 87.95 immediately after the headlines came out yesterday evening. I think the GIFT Nifty will give you a sense of how we're likely to start. And I don't think there is a very large cut even there, about 60 odd points lower start. I just put out some levels for you, and then we'll sort of move on. For the Nifty and for the Nifty bank as well, 24,450, 24,500 first support is very near term. And if that goes, 23,800, 23,900 is the zone where the Nifty has found resistance multiple times over the last few quarters actually. So that becomes the next level. And for the Nifty bank, similar levels will come in. 54,956, and then if that breaks, 53,500. I just say one thing. I mean, if you're trying to, are you really going to change your portfolio construct because what has happened? Because this 50% is not going to be permanent. Near zero chance, as I said. But if you're trading, it's a different aspect. And there, I think you need to deleverage very, very quickly, because there'll be lots of news flow back and forth over the next many weeks in these 21 days. And it's almost impossible to really figure out which way this is going to go. So more often than not, I mean, in situations like this, in these very turbulent kind of times, you will get hurt. So trading is a different matter. But if you're in the market investing for the long term, I don't think this really should make you change, how you're thinking about what your portfolio should deliver in the long term. Surabhi.
Absolutely. Big headlines overnight. But the sense also is that this is not about the direct impact, which is 2% of GDP, as we've been saying that. And even lesser, if you look at the market capitalization of sectors like gems and jewelry or textile is very, very minuscule in the Indian market. But sentiment, second-order effects, that's what the worry seems to be all about. Anyway, just very quickly to round up the rest of the global market action as well. US markets again had a great session yesterday. They were flying higher. The Nasdaq was leading the charge with a gain of about 1.2%. By the way, President Trump announced this 25% additional tariff on India. Then he announced a 100% tariff on any semiconductor or chip imports that are coming into the US. And he's making good on all his threats. And yesterday, we also had Apple announcing an additional $100 billion investment into the US, in addition to the numbers, like they've spoken about $300 billion in the past as well in February this year. So they're topping that up. Basically, everyone's towing the line, except India, it seems so far, when we haven't done that at least as yet. So it just tells you how these things are playing out. Week to date, the rip-roaring rally in the US has been so strong despite that weak jobs report. Look at the numbers week to date. The S&P 500 almost 2%, the Nasdaq 2.5%, and the Dow is not too far behind either. Now, just one more word on oil prices. There was some back and forth in the market on whether Trump wants to sanction Russian oil. There's no clarity on it. Marco Rubio said maybe there's something positive coming out of the talks. Then Mr. Trump himself said the talks have been good with Putin. So the market's very confused, the oil market. So the net result is it's range bound, not too much moving. About a 0.5% increase on oil prices this morning. So we'll wait by for that. Now, if you thought that this tariff, 100% tariff on chips is going to sour sentiment in Asian markets, that's not what's happened. Asian markets also are a very, very green screen. The Hang Seng is up about 0.3%. The Japanese market is up almost 1%. So it's a good morning of trade across Asia. And as usual, we've been singled out. Let's see if today as well that trend continues. India is the only big market that's been falling for the last two sessions or not. Coming to the flows picture, this is where things are really, really rough. Again, we had a FPI sell number, 5,000 crores of selling yesterday. It's been offset by DI buying. Remember, Nilesh yesterday told us, Nilesh Shah of Kotak Mutual Fund, expect record mutual fund inflows, equity inflows in the month. And the data will come out in the next couple of days. So that's cushioning the impact. But the FPI selling is big. It's already 8,000 crores so far in August. And yesterday itself was a 5,000 crores sell number. In fact, that is the biggest concern. If you look at the sense on the street, and I'll give you just a case in point. Nuvama in its note mentioned this, that FPI selling, not just in those exporter stocks or some pharma names, but overall FPI selling could hit the mid-cap market really hard. So need to be on guard for that. And of course, the rupee is going to be in focus yesterday. It's not too far away from the all-time lows. It hit the all-time lows on Tuesday, which was 87.88. It pulled back a little bit yesterday. Let's see what the final implications is. And because of the rupee, I'll watch out for IT as well. Usually ends up being a bit of a safe haven in times like these. We'll see if that thesis plays out again or not. Nigel.
Well, that's right. Today the big question is, are we going to see peak of Trump's tantrum with regard to tariffs? That's going to be the important point because it's already at around 50%. If that's the case, the markets may start looking ahead because that uncertainty now is playing out. 25% has gone to around 50%. It can't get much worse from this, at least, going by what data we have. Well, moving to what's happened in the last 1 month or so. The India VIX, well, that one really hasn't popped up. And remember, we have seen the Nifty that's corrected, big time from the recent top. So Nifty is down close to around 1,100 points and the India VIX is still quite subdued. So that's telling you there is no big panic selling as of now, at least as of now. We'll have to see how the VIX moves, but at around 12 odd, well, that's very, very digestible from a bullish perspective. The Nifty is down 1,100 points. You have the Indian rupee as well that slipped, closer to the lowest levels that we've ever seen. So the market appears to have more or less been prepared for some kind of shocker that's going to be coming in from President Trump. Well, moving to the FI positioning as well, they as well seem to be prepared because after 3 months of buying, they sold in July. They sold 18,000 crores or thereabouts. And on the index futures, well, on the short side, they're holding at around 91.5%, which is the highest levels we have seen since March 2023. And what did they do yesterday? Well, they covered some mild shorts. They added, some short contracts on stock futures, which could be a bit of a hedge. But they're writing calls very, very aggressively. So short positioning in the index futures and you have calls that are written very, very aggressively. That's telling you that, in fact, the setup as it is very, very cautious from the FI perspective. We'll have to find some good news from somewhere. But otherwise, their positioning is pretty much, against the markets moving up. So we'll have to see some kind of positive surprise. Moving to yesterday's trading session, well, I said the FIs, they covered some short positioning. And it appeared, the Nifty Bank, after seeing a sharp correction, there was a bit of a short covering bounce that played in on the Nifty Bank. And that's why that was a relative outperformer yesterday. Moving to the options data, the PCR has come down to around 0.73, 0.74 in yesterday's trading session. Today, going by the opening, going by the uncertainty, at some point of time, we get below that 0.7 times. And that's when you see net short contracts, PCR sub 0.7. That's normally one of the cues that you see with regard to a short covering bounce. 24,600 call, 24,550 call, both of them added very, very aggressively yesterday. Aggressive call writing is what we saw. So going by the 24,600 call, we saw writing over there, premium is around 60 rupees. Today, remember, is the weekly expiry. That becomes the important resistance mark. But otherwise, your reference level, the 100 DMA, you don't want it to break. And I wouldn't be surprised actually at some point of time, because it's expiry day, because of the positioning, that we do see a big recovery from the low point of the day. The Nifty Bank, yesterday, it showed some signs that it wants to give up the recent underperformance. Well, it's pat in the middle of the 20 as well as the 100 DMA. You'll want it to defend this lower level. Let's see whether or not it's got more in store, because otherwise, in the last 5 to 6 trading sessions, this one has come in for a bit of a knock. So Q is a little bit subdued this morning, but since it's weekly expiry and going by positioning, we'll see some kind of a fight intraday from the bulls.
Okay, all right, got that point. So let's see if the bulls can indeed fight back. And absolutely, it's the worst. The worst of the news is now out. So does it get better from here? Let's see. Well, we have a packed lineup to address Trump's tariff impact on India. Coming up in just a bit, we'll get your opinion from top global voices, Arvind Sanger, William Lee, and Herald van der Linde. All of them joining in with their perspective on what this means for India and Indian markets. Then reactions coming in from top diplomats in the trade sector, Atul Keshup of USIBC, Michael Kugelman of Foreign Policy magazine, former Finance Secretary S.C. Garg, and 2 former envoys to the WTO, Anjali Prasad and Jayant Dasgupta. So plenty of diplomatic opinion coming your way. And, of course, the market voices then to take us through how investors need to navigate this. Pankaj Tibrewal, Sridhar Sivaraman, Sunil Singhania, all weigh in on whether this, in a way, marks the worst for the market or is the downside just about opening up. We debate this with all the gentlemen. And then, of course, reactions coming in from India Inc. as well on this tariff implication. We'll be in conversation with the management of Pearl Global Industries, Bharat Forge, as well as Lupin. And, of course, we get in a word from the Apparel Council, Sudhir Sekhri of the Apparel Export Promotion Council, as well as Vipul Shah, former chairman of the Gems and Jewelry Export Promotion Council. They both join in. These are the 2 most vulnerable sectors. What happens now? We discuss this. And then, of course, the economic implications. So far, it has been between 20 to 30 basis points GDP hit. But will those numbers rise? We are Soumyakanti Ghosh of the SBI.
Okay, all right. Well, that's the Power Pack lineup coming up. William Lee, Chief Economist and Executive Director at the Milken Institute, and Arvind Sanger, Managing Partner at Geosphere Capital Management, is with us. Gentlemen, thanks very much. Good to have both of you here. Arvind, your thoughts first in terms of the news, the 50% rate, 21-day window. What do you make of it?
Well, I would look at the oil markets. If there was seriously going to be a dislocation where oil would not be flowing from Russia to India and there would be Russian oil staying off the market, oil market would have gone up a lot. Oil shrugged off this news. So I expect in the next 21 days, President Trump is trying to show his deal-making skills, and India may be kind of the excuse he may be using to put pressure on President Putin. I don't think the market expects a follow-through of the real impact of tariffs on India curtailing Russian exports. So therefore, I am somewhat more sanguine about the fact that the tariffs will really hit at that stage. And in the meantime, India is obviously working on a trade deal. And the two things come together, some kind of a deal that Putin offers and some kind of a deal that India does. And these tariffs will all be in the rearview mirror without ever really hitting Indian exporters the level that, that 50% would imply.
William, your first thought, you'd agree? I mean, that's logical.
I agree that the deals are likely to change over the next several days and weeks, but I don't believe that anything will change unless India does make some changes. We have to remember that certain sectors have actually been excluded from the high tariffs, pharmaceuticals and electronics, which really I think would go toward the U.S. helping India to reindustrialize in these key sectors. As far as the oil market's concerned, remember President Trump said that the high tariffs are on at extra 25% because India has shifted its sources of energy imports from the rest of the world to Russia. I mean, prior to 2022, India imported less than 2% from Russia. Now it's up to 40%. So India has really shifted during the war because Russia has priced this oil at a very low price. And for good reason, India wants a cheap source of energy because India imports 85% of its energy. So I think without a concession from India to the reality of the need to sanction Russia for the war in Ukraine, I don't think President Trump's going to move on the tariffs. Every successful trade deal with a low tariff has seen some kind of purchase of American energy or investment of dollars into the United States. And that has been the formula for success.
Absolutely. You said it, William, and that's exactly what I want to take back to Arvind as well. Arvind, assuming that this will work out, would that be a little simplistic and maybe a tad risky at this point? Because that's what William's also saying. Look at all the other trade deals, right? The US has made zero concessions. It's gotten total market access at no tariff in all these countries, including South Korea. It's also made these countries invest further in the US. So looking at the things which are at stake, not just oil, we're talking about GM crops, agriculture, dairy, and here the sort of the political backing. I don't know if you saw Mr. Rahul Gandhi's post yesterday. I mean, there's a huge clamor saying don't back down, don't let the US bully you. So do you still expect a breakthrough in the next 20 days?
Well, so let's separate the two things. One is the oil tariffs, and the other is the 25% tariffs on the original deal. I would say if you're talking about the latter, I thought we were talking about oil tariffs for a second, but if you're talking about the basic 25% tariffs, I think India has to find a way to make a deal. And it's very easy. India can buy a lot of LNG from the US. India can buy a lot of oil from the US. Those are, it already buys both. It just can commit to buying more. It can commit to buying more Boeing airplanes. So there are many things that India can offer. And maybe India can offer some investment opportunities that Indian companies would invest. Remember, these are all promises that will take a while to play out. So there are many things that India can offer. I think it will need to make some concessions. Obviously, now that it's become a sticking point on something related to agriculture and dairy, which is going to be politically hard, given that the opposition is going to seize on it. But I think that is the nature of a deal where Prime Minister Modi is going to have to find a way. I'm less concerned about the oil tariffs. I think the base tariffs, I don't think India is the only one importing Russian oil. And I think just because there is no deal and because China has rare earths, China is not getting the same treatment.
Absolutely. No, now it makes perfect sense. The oil tariff, maybe that'll resolve itself. They're anyway meeting the Russians and maybe something gives. Do stay on. We have a lot more questions. We need to figure out how to navigate the market as well. Stay on, gentlemen. Quick break. We'll be right back with more.
Welcome back. You're tuned into Bazaar Morning Call. Well, let's get in Parikshit, who joins us to detail India's response on the imposed tariffs and also on what sources are telling him on the way forward. Parikshit?
Well, India has put out a strongly worded saying that the additional tariffs on India are extremely unfortunate. India is being targeted for actions that other countries are also taking, and US actions are unfair, unjustified, and unreasonable. India's imports of energy are based on market conditions and our national security and energy security. India will be taking all steps to protect its national interests. So India is saying that we cannot really stop supplies from Russia. It is a strategic partner. We are buying oil from Russia because the earlier administration, the US, had also allowed us to do so. And we're not violating any sanctions. We're not violating any law of the land while purchasing this Russian crude. Now, while US targets India for importing Russian crude, take a look at this. 22% of China's crude imports in 2024 came from Russia. China was the largest importer of Russian oil in June 2025. China is also the biggest importer of fossil fuel among 10 countries which have been buying fossil fuel products from Russia since the start of the war. So you cannot really single out India as well. And this is what is confusing. This also shows the double standards of the United States. Now, when it comes to the what next, our sources telling us that we have very close business-to-business ties with the US, and our country would like to continue with those relations as nicely and as properly as possible. What happens next? US has said that they will still impose sanctions on Russia's trading partners despite highly productive talks. Yesterday, Donald Trump had said that the president's envoy has had very productive talks with Russia, and they'll see how things go. But the sanctions will remain on countries like India. The US trade team is going to be visiting India on the 25th of August for the 6th round of talks. Those would be crucial to see if there can be any possible breakthrough. And finally, the 50% tariff will come into effect on August 27 if we're not able to reach any kind of consensus. So the important point is 25th of August is when the US negotiating team comes to India, and 27th of August is when that deadline comes into effect and tariffs come into effect. So if we can have a breakthrough in those 2 days between 25 and 27th, there could possibly be a reprieve.
Let's hope for that, Parikshit. Thanks a lot for joining and giving us that quick update.
Nigel, just one thing. That statement that Parikshit read, right? I mean, it's a very matter-of-fact response. There is no anger. Just look at the response from the government.
The MEA response, yeah.
There is no. It's not a retaliation. There is no. I mean, there's nothing. It's just calling it out. It's unfair. Yeah. But they're not retaliating back. I mean, retaliation to retaliation, which I think is pretty smart in that sense, right? I mean, there is no and that is, again, it kind of goes into the fact that the hope, and justly so, that maybe this 21-day window there will be some because if you just throw your hands up and say, well, we're not going to accept it, go to hell, right? I mean, then it's a break, right?
Yeah.
You're just calling it out that it's unfair. It's not correct. And then there's this 21-day window.
Prashant, my only limited point is that to get to a deal, both sides have to give. This is very clear. The negotiators have been speaking since the 2nd of April. Yeah. And it's just, we want it all,
by the way,
all or none, right?
Two other points, right? So you said he wants other countries to drop tariffs to zero, right? Yeah. He's getting them to drop to zero.
Yeah, they were already close to zero, yeah.
Exactly.
Yeah.
Those countries were at 2.5%, 3%, 3.5%. They're already close to zero. So for them to go from 3 to 0 is easy.
Yeah.
India's effective tariff rate is about 11.5%, weighted average tariff rate, 11.5%. So for in one shot, for them to go from 11.5 to 0, it's hard.
He wants it all.
It's a big gap. And the other point, investments into the US, right?
Yeah.
It's all Hawa, right? Yeah. $600 billion EU will invest in. Have you read the EU statement? What the European Union is saying? There's no agreement.
Yeah.
EU is a bunch of different countries. They can't agree on anything for starters. And you're saying that they're all. I mean, so it's who knows? I mean, they're a big commit. That's the SoftBank investment, right? What happened to that? You remember? Both were in the White House signing on that Stargate. I think it was called Stargate, right? I mean, it didn't go anywhere. So these are all big numbers, big talk. We'll see what finally happens.
He likes to wave the flag.
Yeah, absolutely.
Thank you for your attention.
Thank you for the attention to the matter.
I think India's response is very mature.
Yeah.
Keeping the door open that we can get to a deal in the next 21%, and that gives some hope, right?
Because if you throw a tantrum, then it goes for then there's
Absolutely. Indeed. Let's get in Arvind. Arvind, I wanted to ask you about this point, because in terms of an India GDP hit, it could be in that vicinity of around 30-40 basis points, depending how you're working about that. The problem is the second order impact with regard to FI flows. Now, one argument would be that the FIs anyway sold close to around 18,000-20,000 crores in the last month. So it's not that they were coming in, with the big bags of money and, pumping it in. They were just at the sidelines. Do you think this could trigger, further FI outflows from India? And will there be a verge to not putting in fresh money? What's your take?
I don't think the FIs, I think FIs are a minor problem right now because they've already been pulling out. I think the bigger problem would be FDI. So from a deal standpoint, long-term deal standpoint, I think keeping in mind FI flows will come and go, and they'll depend eventually on the Indian economic growth rate. So yes, it is a little bit of a hit on GDP, and that'll hurt. And that'll impact market valuations and all of that. And it's hurting the rupee, and all of that does affect FI flows. My bigger concern is if we are stuck at 25%, forget the 50%. If we are stuck at 25% tariffs versus everybody else moving to 15%, that is going to put a disadvantage on India in terms of some of its, attracting FDI for some of the global, opportunities that it sees. So I think it's important to find a way to look. The world is never fair, and right now it is unfair the way the U.S. has been dealing. But it is not in India's self-interest to dig in its heel at this point, but to find you were saying how many numbers. We can also why shouldn't India throw out big numbers? Well, what stops them from making tall promises which they have no intention of keeping? We're not a bunch of that can't lie, right? I mean, if that's what it takes, hot air to win, you got to play the game the way it's played. Time to get real.
That's an interesting point, and I wonder what our negotiating team would have to say to that. But we'll see. Let's work with at least the hope that this whole oil bit gets resolved. So, William, even on the 25% baseline tariff, if that remains, if for whatever reason, unfortunately, there's no breakthrough on agriculture dairy, these are very close and sensitive issues for India. Now, at 25% tariff, does India lose a bit of its charm or its premium? We were talking about China +1, global supply chains realigning to favor India. Could that be at risk?
That's a great question. I think we, again, have to remember that the 25% across the board is not across the board. The effective tariff rate is much lower than that because the major chunks of exports to the United States, pharmaceuticals and electronics, is exempt from these tariffs. And since a big part of India's development plan is to really bolster and increase those two sectors, I think one way of doing that is to have complementary investments going into the United States that help the production of, say, the iPhone, right? Tim Cook made a big deal about how many parts of the iPhone are being produced in the United States and being shipped to India to be assembled there. And I think one of the negotiating points that I'm sure negotiators will bring up is we can invest along with Tim Cook in the glass production in the United States. And so I think the key is what is India willing to do in terms of partnering with the United States? And again, the formula for success with President Trump has always been buy American products or invest in American jobs. And I think for complementary investments that bolster the production of stuff in India, especially in key strategic sectors like electronics, that is the avenue for success. Going forward, if you want immediate success. And in terms of other sectors, I think one of the things that India can do is, again, look toward complementarity for its your neighbors and be able to partner with them in conjunction with investing in the United States.
So
the United States really does want to create a trade zone between U.S. and India and India's counterparties.
So basically, I think Arvind hit the nail on the head, Prashant. He's saying we have to strike a deal and convince him that it's in the spirit of MAGA. Just somehow convince him that it's all about MAGA.
So you just give him a political win. I mean, basically, at the end of the day, right? I just had this is completely off-tangential question, but we don't know what goes into the mix in terms of decision-making, right? And both of you, Arvind and William, briefly, you think, President Trump, of course, it's all about I, me, etc., right? He really wants to, and he has sort of led for his country at least, and he's negotiating all these deals, etc. But at the margin, do you think there is there is a bit of a sort of ego bit here, which comes into play? With regards to all, with India, it's about, the border conflict with Pakistan, right? President Trump saying, well, I helped stop that war. Who knows what goes into the mix at the margin and how much? You can't put percentages to it, right? 45% is because of this factor and 35% is because of that. Do you think it's a factor at all, Arvind?
I absolutely believe it. So if India put out a statement along with a deal that we are grateful for to President Trump for all the help he's given us, including in the India-Pakistan war, they can put in a way that is acceptable. But, Trump feels like Pakistan recommended him for the Nobel Peace Prize and acknowledged his help, and India is not. And I am sure it is a factor. How big a factor? There are other things like big numbers that he can boast about, but it'll soothe the ego. So there's definitely an ego component to everything that Trump does.
Yeah, no, absolutely, and glad you called it out. I was not sure whether I should ask it, but William, your thoughts?
I think President Trump has invested entirely his entire ego in bolstering employment and investment in the United States. And anything that goes to further that would help things. And anything that detracts from that will kill you because, if you say, oh, I'm going to commit to investing $100 billion in the United States and never show up with the dollars, President Trump even said today, right, if you don't show up with the dollars, I'm just going to charge you more and get the money back that we exempted you from the tariffs. That's exactly what he said about semiconductors. The 100% tariffs is 100%, but if you produce in the United States, those semiconductors come in 0% tariff. So I think the key to, again, negotiating with President Trump is his entire ego is vested in more jobs in the United States and more investments in the United States.
It's not the Nobel?
Incredibly,
William, it's not the Nobel?
Well,
it's not.
I'm sure he's mentioned the Nobel to people.
Well, I think the short point, gentlemen, is that, something's got to give, as they say. If there has to be de-escalation and it's beyond trade, the questions are on the relationship itself, which has been bipartisan, which has been continuing for decades. It needs to come back on track, and we hope it's sooner rather than later. Thank you so much for weighing in on an important morning. Appreciate both of you being with us today. Thank you.
Thank you.
Well, on that note, we have to take a very quick break. As we take the break, here's a view on the ongoing trade tensions between India and the U.S. Mahesh Nadurkar of Jefferies says the U.S. has imposed an additional 25% tariff on an already high 25% base, citing India's purchase of Russian oil as the reason. He says the direct financial cost to India of replacing Russian oil is estimated at 15 basis points of GDP, and the flattish oil markets over the past week suggest that adequate supplies are available. He believes the political fallout from U.S. demands on dairy and agriculture remain the key stumbling block to a deal. He remains hopeful of an eventual trade agreement with the U.S. We'll take a break and come right back. Welcome back. So it's been a sea of green across most global markets. For what it's worth, Asia is all up and about. Most of the regional markets there on your screen. Look at Taiwan. Taiwan's racing away. This is despite the threat of 100% tariffs on semiconductor chip imports. So anyway, it's a big global sea of green. The implied open will come up. That's been telling us that we'll probably have a 50-odd point dip. Let's see what it's saying right now. Okay, it's about a 70-point dip. Lots of stocks to track as well. So let's straight away get to our list of top stocks to watch. Our team is standing by with all the details as always. Guys, good morning to all of you. Apart from tariffs, we have to look at actual individual movers and shakers as well. Hero Motor, Sudarshan, how are the numbers and how's the read-through?
There was a hope that company might throw some surprises because expectations were very muted, but company has reported earnings that have largely missed estimates except on the margin front because volumes were muted both year on year and on a sequential basis, and that's the reason there was a dip in the revenue. Even profit was aided by lower tax rate and the other income. That's the reason profit has seen a just minor increase of 0.3%. Revenue has fallen by 6%. EBITDA was down as well. It was down 5%. And margin was flat at 14.4% and almost at the same as we were expecting. Now, going forward, like at 10:30 a.m., company is holding the analyst call. So all the eyes would be on that. What does company say about the outlook, especially in the festive season? Because there is an expectation that there might be an increase, especially for the entry-level segment. And with Hero Motor being the market leader, we expect that there might be an increase in the volumes. But on the basis of earnings, I'm going with mild red for Hero Motor Corp.
Okay, all right. Thanks a lot for that, sir. Let's go across to Nimesh. He's here to tell us about a couple of large trades we'll be watching out for. Eternal and Kotak Mahindra Bank. Nimesh?
Hi, Nigel. So, Eternal was part of, in fact, both were part of my charter list in the last few days. I'll start with Eternal first, as well Zomato. A large block, it's a clean-out trade, and Financial is going to sell the remaining 2% stake in Zomato via block deal. The indicative price is around 285, which means a 4.5% discount to yesterday's closing price. But my sense is the deal might happen in the block window as well. So if executed in the block window, you might see a bit of a recovery and in the green as well. So that's the first stock to watch out. The second is Kotak Mahindra Bank. Even there, one large FI holder is a seller. It's an undisclosed FI, but we understand Invesco is a seller there. They are going to sell nearly, again, there is a 2.5% discount in the block deal. But again, in Kotak Mahindra Bank, if the deal happens in the block window, you might see a bit of covering as well because there was an anticipation of a block for the last couple of days. So, two large blocks, Zomato as well as Kotak Mahindra Bank. Execution will be key, so need to watch out for that, but could start in the green if happen in the block window.
Okay, all right, Nimesh, thanks very much for that. Trend reported numbers as well. Mangalam has got details. Mangalam, morning.
Good morning. So there was a surprising beat on the Trent EBITDA this time around. Remember, we knew that revenues already grew about 20%, 19-20%, and the stock had seen a correction on the back of that as well. The EBITDA came in at nearly 850 crores. The street was working for a number of 717 crores, and as a result of which both the EBITDA margin and the net profit has been above expectations as well. One would imagine, why is it that this is a surprise? Because one, the gross margins have actually compressed by 70 basis points, and the EBITDA has actually been led higher by employee expenses as a percentage of sales coming down by 170 basis points, and rent as a percentage of sales coming down by 100 basis points. And this despite the company adding more stores, depreciation has increased, and the net profit grew at a lot slower clip than the EBITDA and the revenue. The fashion business out there, the like-for-like sales growth has been low single digit. That's something that the street may not like. Star Bazaar, had a flat like-for-like growth. So all these factors point to one thing. While the EBITDA is doing a lot better, the revenues seem to not grow as fast as the street was anticipating. The stock has seen a correction, has also seen a bit of an improvement from the lows. I expected to see some mild green in today's trading session on the back of EBITDA beat. But let's see where it goes from here on, because the bigger driver for the stock will be revenue growth and not just EBITDA growth.
All right. Thanks a lot for that. Mangalam, going back to Sudarshan, tell us about Bajaj Auto.
So yesterday, company had reported earnings during market hours, and those earnings were largely in line with estimates. And after that, at 5 p.m., company held the analyst call, and commentary coming out of that from the analyst call is looking largely positive. On growth front, for the domestic industry, company is saying the industry may see a growth in the range of 5 to 6%. For the export market, it maintains the growth estimate of 15 to 20%, and it believes that the focus segment, that is 125cc plus segment, company will outperform the industry. Second, margin trend. So in Q1 FY26, due to Forex, company's margin was impacted by 50 basis points on a sequential basis. That company believes that it may reverse because of recent rupee depreciation against dollar, and FY26 margin is going to be same what company saw in FY25. Talk about the market share in Q3 FY25 and Q4 FY25, company was losing market share, and that reversed in Q1 FY26, especially 125cc plus segment, in which company has gained market share by more than 3%. Lastly, on electric vehicle, due to non-availability of rare earth metals, company believes that it might impact volumes for the month of August in both electric two-wheelers and electric three-wheelers. But good part is, if you combine both electric two-wheelers and electric three-wheelers, EBITDA margin is crossing 10%. And some of the models in electric two-wheelers have already turned EBITDA positive. So overall, commentary is positive. That's the reason I'm going with green for Bajaj Auto.
Okay, so slow start, but maybe it's going to rev up later through the year. Thank you for that, Sudarshan. Let's get to Vamakshi. BHEL numbers came out as well after market hours yesterday. How do they look, Vamakshi?
Well, Surbhi, it's a disappointing set coming in from BHEL. Keep in mind that the revenue growth was flat this time around. It came in at 5,486 crores. The cost of goods sold were also rather flat, resulting in only a 14 basis points decline in the gross margins. But when we look at the other expenses, they have nearly doubled to almost 675 crores, resulting in EBITDA loss of 537 crores. And this has widened from 169 crores, which we saw in the same quarter last year. The company has reported a net loss this time around of 455 crores. Keep in mind that the street was working with an estimate of a net profit, so this comes in as a big shocker for BHEL. And what is actually driving this performance low is the power segment. Take a look at the revenue that has dipped by almost 5% this time around, and the company's EBIT losses in this particular segment have now widened to 510 crores. The industry segment, on the other hand, did relatively better. The revenue saw an uptick of 17% and the margins improved from 4.67% to around 19.32%. The ordering activity though was quite robust, up almost 42%. The order book too stood at almost 2.05 lakh crore and therefore came in higher than what the street was penciling in. But overall, when we look at the numbers, a very dismal set, going with the red for BHEL.
Okay, thanks a lot for that, Vamakshi. Hobby across to Ekta. Ekta, tell us about Fortis Healthcare.
Very good numbers. It's a strong performance top down. So, for example, you had the revenue, which was up around 16.6% on a year-on-year basis. The EBITDA expanded over 40-odd%, margins 22.6%, and a profit of around 260-odd crores. Now, it was led by the hospital as well as the diagnostics business. So, the revenue was up 18.6% year-on-year in terms of the hospital business. Margins at 22%. Occupancy also improved to 69%. Diagnostics revenue was up 6.3% year-on-year. Margins expanded to 25.8% versus 20.4% on a sequential basis.
Okay, all right, Ekta, thanks a lot for that. Well, I'm looking at Jindal Stainless, and actually those numbers look good. The stock yesterday as well recovered considerably from the low point of the day. What went on in the quarter? Well, we had volumes that recovered to around 630,000, which is a good growth on a year-on-year basis and more or less stable on a sequential basis. The EBITDA number as well did pop up by close to 8%, as was the case with the revenue. What's good to see is that the margins have recovered. So if we look at the margins on a sequential basis, there's a good recovery. And we're looking at it on a sequential basis because, on a year-on-year basis, it's more or less stable. But the problem was that in the last quarter, the street was very, very concerned. EBITDA per ton, the calculated number came in at around 16,500 rupees. And you also had absolute margins that came in at around 10%. Now that's recovered, so that's why it's heartening. They've been incurring some capex, but yet the debt number is more or less stable, which is good as well. And for Jindal Stainless, the problem is the export market seems to have dried out. I recall around a few quarters ago when the export contribution was more than 15%. Now that number has come down to around 9%. So they'll be impacted by this sort of trade uncertainty, but otherwise the numbers looked quite good. That said, let's go to Gaurav. Gaurav, tell us about Hudco.
Well, when we look at Hudco, loan book growth was actually quite strong for the company at around 30%. Remember, they had given a guidance of around 1.5 lakh crores of loan book and they have already achieved 1.34 lakh. So it looks very achievable. Disbursement, they remain flat on a YOY basis. But when we talk about net interest income, although the number looks strong on a YOY basis at around 32.6%, it actually dropped sequentially. And as a result, NIMs also declined. And that is the reason why there was some weakness. When we talk about the operating profit, we saw 13% growth and the same trend followed in profit as well. There also we saw 13% growth on a year-on-year basis. Remember, in this quarter, they have reported impairment in negative. That means the credit cost was negative because they also achieved recoveries worth 300 crores. But when we talk about the net interest margin specifically, they have gone down to 2.94%. Now, this is actually the first time at least in the last 12 quarters, where NIMs have gone down below 3%. When we talk about ROAs, there also we saw a drop. It is now at around 1.9% versus what it was at 2.4% just a quarter ago. And that is the reason why we saw a little bit of weakness in profit, and that is the reason why I'm also going with red today for Hudco.
Okay, so Hudco, not that great in the first quarter. Got it. Thanks for that, Gaurav. Back to Mangalam then. Sula Vineyards, on a high or a bit of a low, Mangalam?
Not a lot of wine was consumed this quarter, or for that matter, last 5 quarters. Let's put it that way. Weakness for Sula Vineyards continues. And this time around, the reported revenues are down 8%. Even if you adjust for the one-time WIPS, or Wine Industrial Promotion Scheme, that they got in the base quarter, the revenues have grown just by a smidge, 0.2%. And this at a time when all the other alcohol brands are doing a lot better. So maybe it's just a wine problem. An EBITDA decline of 46%. Net profits almost entirely eroded. From 15 crores, it's gone down to about 2 crores. The share of elite and premium has increased from 71% to 75%. So people are drinking better, but not necessarily more. Wine tourism revenue has done well as well. And that's the one that has actually led revenue growth. Otherwise, overall performance has been weak this time, and the stock price is telling you that.
Yep, it's been a tough several quarters for Sula now. I guess this one included. Mangalam, thanks for the update over there. Let's quickly recap our list of stocks to watch then. The ones that have positive news flow around them would be Trent, Bajaj Auto, Fortis Healthcare and Jindal Stainless. Stocks with negative news flow. Eternal, Kotak Mahindra Bank on the back of those large blocks expected. Hero Motocorp, BHEL, Sula Vineyards and Hudco. Okay, that's the stock list of the day. Let's get to commodities. How the commodity market's dealing with the whole tariff storm that's playing out there. We have Manisha joining in. Manisha, oil markets in such headlines, but the market itself is not moving. You tell us more.
No, absolutely. There's just so much coming in at the same time. OPEC is increasing production. You have U.S. increasing production. It also is about U.S. crude inventory declining. And then this whole sanction on India at 50%, with conversations that some other countries which buy crude oil from Russia could also be looking at sanctions. U.S. also says that there could be potential sanctions on Russia itself that can be expected by this week. So that really seems to be keeping the markets very, very volatile at this point in time. But as you rightly said, Surbi, it really is going to be about various commodity segments. For Indian markets, it's going to be about the gems and jewelry, where we are looking at a 75% decline when it comes to gem and jewelry exports to the U.S. for the month of July. August is expected no better there. Same is the case with the rice exports as well. Trade is suspended here. So is the case with the textile industry and the seafood industry as well. So these are the 4 industries to watch out for as we stare at 50%. Of course, the negotiations with the U.S. counterparts in the 3rd week of August is something that the street is now looking at. Having said that, there is some safe haven buying that you have seen for gold. It's trading at a 2-week highs. 100% tariff on imported semiconductors and chips from U.S., excluding, of course, companies that manufacturing within the U.S. market, is yet another thing that has led to some safe haven buying come in for gold. And then it's not just India. There are some select Brazilian goods which also have seen tariffs go up by 50%. The weak U.S. labor market. President Trump expected to nominate successor for Fed Governor Adriana Kugler, also replacing Fed Chair Jerome Powell. So there's just too much happening, and gold really seems to be the place to be right now.
Tell us about it. It's like your head is spinning, 360 degrees and then back the reverse way, right? That's just been the intense news flow the last couple of days. Thanks very much, Manisha, for joining in with that quick roundup. And of course, Gucci put that on the table. Seafood exports to the US, so watch out for the shrimp feed stocks. Avanti Feeds, Waterbase, etc. These stocks are in focus as well. Herald van der Linde, head of Asia Equity Strategy at HSBC, is with us. Herald, great to have you on. Very, very newsy morning. So I'll start with the core question here. In India, we know that we are not an export-focused economy. As a percentage of GDP, US exports are just 2%. But the concern that's building up here is about FPI flows into the market here, overall FDI flows. Will foreigners shy away from India in the near term because of this whole tariff issue?
Yeah, I think that the tariffs have got a couple of implications that go on and beyond just putting prices up. It creates uncertainty. So it means that people find it difficult to make investment decisions. If you, for example, would invest in the US, do you want a factory in Mexico now, or do you want in the US? If you go to Mexico, it's cheaper labor, but you might get tariffs. If you go to the US, it's more expensive. But if you go there and the tariffs goes down, then you're in the wrong place. Such it is in 2 other countries, right? Should you be investing in India now? Would you get tariffs at some point in time? So everybody is sitting back and waiting for things to settle. And unfortunately, things haven't settled yet. So I think investment trends around the globe probably will start to come down, in addition to trade. So that's a difficulty that I think not only India faces.
No, but specifically on FPI flows coming to the equity market, Harold, what is your sense? Because India was anyway not getting too much flows. July, we started seeing outflows. Now, will this tariff issue become an additional overhang, or will investors look through this as they look at Indian equities?
No, I think it will be a little bit of an overhang because they have excuses to look at other markets which look really interesting at the moment. And that is really North Asia, Korea and Taiwan, even more so than China. So far, the Chinese market is done pretty okay, despite the tariffs and these sort of things. Like India, it's a domestic-oriented market. But the excitement for the moment lies in Korea because of corporate governance changes taking place there. But also, they make particular what are called high-density memory chips that you use in AI. And it's the same in Taiwan, where they make custom-made chips for NVIDIA that are being used in AI. So there's this feeling that there's growth in North Asia. In addition to that, we got global defense spending that benefits companies in Korea again as well. So there's a lot of attention that goes there, and that needs to be funded. And India is one of these markets where people say, well, a little bit expensive, growth is coming down, they get tariffed anyway. So it's a sort of an excuse to use that and reallocate money elsewhere.
All right. Hi, Harold. Good to see you. But, you have a neutral call on India. And as you said, valuations has been one of the problems. But now we have done some bit on the fiscal side. There's monetary push as well that's taking place. And the Q1 earnings, in fact, are not as bad as what the street was working with. There is hope that we see a recovery in the second half of the year. If that's the case, would you be looking at changing this stance? We've already pulled back a little bit from the recent peak. We're down 1,000 points in the last 1 month or so. And from the peak as well, we have seen a bit of a correction. At what level do you think you will start getting back into India?
Yeah, I think actually a little bit over a year ago, we had 10 worries about India. It was expensive and these sort of things. Everybody was overweight already. Probably 8 of these 10 worries are now out of the window. Valuations have come lower, earnings expectation lower. People have sold out and reduced their weightings in India. So all of that is actually on the margin positive. What we now need to see is that regionally starts to fit in as well. And then I would say the stars are really aligning for India. And we might not, to be honest, too far away from that, because as I just spoke about Korea and Taiwan, to be honest, those stories have been rallying for some time now. And at some point in time, we'll probably start to fizzle out as well. AI is really exciting, but you can't have stocks just go up and up and up for a prolonged period in time. Because then they run into valuations issues. Well, were that to be the case, then I think you could actually see that money that I just said was left India to go to Korea and Taiwan might actually start to return back into India. And that might well be something that happens in the second half of this year. What we need to see is that we get more confidence on growth in India in the first place. Now, we're in the midst of earnings season, and some of that confidence is starting to come through. But so give it a bit of time.
Well, so interesting bunch of points you make, Harold. The other point, I was just thinking as you were talking, Harold, the big global theme, right? I mean, the one singular theme globally for the last 1 year, 1.5 years is, as you just said, AI, right? Bulk of the new money has gone into, has tried to find ideas around it. I mean, either direct plays, big global tech giants, supplies into it, power, whatever, right? I mean, that's been the big one. And that theme kind of is absent in India, right? Except maybe, if you want to play it through the power side, there are no plays, actually. And that could perhaps, at the margin, you think, Harold, explain why, FII selling this year has been about $10 billion. So you think that's partly a factor?
Yeah, that's partially affected. This is why we see this rotation into Korea and Taiwan, because they're so very well exposed to this particular team. They are the hardware producers to keep AI running, the chip makers. And you see, if you go deeper in these markets, there are other companies that benefit from this as well. You've got companies, for example, for AI, you need large data sets. So you have companies that organize servers and these sort of things. Even in Malaysia, there's a company that is involved with that and has also performed very well. But you are right. That is very much a Korean-Taiwan story. China has its own DeepSeek and its own companies there as well. India and ASEAN are much less exposed to this. They don't really make this particular product, so or not really into that particular food chain. So that means that at the moment that's not really good, but that can change, right? Because at some point in time, it's not going to be AI and making it. It's about how companies will implement it, how it makes them become more productive, how they maybe can redistribute their product, rebrand it, reposition it. That's why Indian companies, of course, can benefit as well.
Yeah, it's quite interesting that today morning, most of the major markets, I think even Taiwan, none of the markets were down big time, despite the 100% tariff on semiconductor imports. But then that's just how it is. Just finally, quickly, Harold, you said things are becoming a little better for India, including earnings. Most people here say that it'll be 9 to 10% earnings growth this year. I mean, tell us what you're thinking, and whether 10% earnings growth will be enough to get foreign interest back.
Yes, I suspect it. Actually, at the beginning of the year, we made a rough guess, and we thought, earnings growth in India probably is going to go to 8 to 10%. At that time, it was 18. So the growth expectations have come down to where we start to feel like this is probably reasonable. What we now need to see signs that actually that is happening, that it doesn't fall further to 6, 5, 4, 3, 2, 1 or something like that. So if we get some sense of stabilization at, say, 9%, 10%, that is good, because then we can price off that. And then, as I said, we've seen lower valuations already. People have already sold to India. If you see some tiredness in the AI story and or China, then suddenly India might look okay again. So we're working into that direction, it seems, but we're not there yet.
Relative. Life and markets tend to be always relative. All right, Harold, thank you very much for joining in. Great perspective. Good speaking with you this morning. You have a great day, and we'll connect again soon. Well, there you go. That's a market perspective coming your way on how India is positioned and how it's competing, not just in trade, but of course, inflows as well from regional Asian peers. Let's move on and get you some reactions from India Inc. as well on Trump tariffs. Lupin's management has told us that if Trump's 250% tariffs on pharma become a reality, then it will have a significant impact on the US market, as 75% of the drugs in the country are imported. Take a look at what the company's interpretation is of all this tariff talk.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff on pharmaceuticals, it would have a significant impact on the U.S. market per se. I mean, as we've talked in the past, 70% of the drugs in the U.S. are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India. We would expect to see price increases, so inflation in the U.S. Generic, business and pricing, and in competitive areas where there's an asymmetry on tariffs from different countries, we would expect potential disruptions, especially essential medicines that are highly competitive and on thin margins. So we would expect a combination of inflation on generic prices, as well as potential supply chain disruptions in the U.S., both for the industry as well as for ourselves.
Well, time to slip into a short break. Up next, we'll be joined by the management of Pearl Global to decode the tariff impact on Indian textile industry as Trump hits India with an additional 25% tariff. Stay with us. Welcome back to Bazaar Morning Call. Well, as promised, let's get straight to the management of Pearl Global and decode the tariff impact on the Indian textile industry. We have Pallab Banerjee, the Managing Director and Group President at Pearl Global. Hi, Pallab. Good morning. Shocker coming in from Trump. Give us a couple of numbers now. How does India stack up post this recent tariff with some of the competing nations? If you could help us out with that.
Yeah, thank you again. Just spoke last week with all of you.
Yeah,
and by the time
another shocker comes in, so that's why we re-invite you.
So 25%, we were all struggling to mitigate that risk. But now with 50%, most of the retailers immediately want to move out the business from India to other countries. Fortunately for Pearl Global, we have been working all through the night already, as soon as this announcement came in. They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be I would say, a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
But Pallab, sorry to come in over there. Exactly on this, I'm so glad you joined us this morning. Now, I want to understand, because you're also manufacturing in Bangladesh and in Vietnam, and you're saying you're going to be shifting some of the business, as in some of the manufacturing, to them. But there's transshipment. Now, that transshipment tariff, does it only apply if the goods are originating from China? Or, I don't know. I mean, is there an issue over there?
No, it's not transshipment. We will be manufacturing this product in Bangladesh. Or
so you'll get the Bangladesh tariff, yeah. Okay, you'll get the Bangladesh and
if you make somewhere and then you send it to somewhere and then you export it out of there.
Yeah,
okay. That is anyway illegal.
That's true. That's true.
Nigel, just one question. And this is a basic fundamental question. There are two dates here, Pallab. One is August 27th and the other one is September 17th, right? And the executive order says goods that were loaded at the port of origin and in transit by August 27th and entered before the cutoff date of September 17th are exempt from the additional 25% tariff. So actually the final date is September 17th. Am I wrong in that understanding?
Yeah, so no, correct. So what will happen is that whatever goods are in production, so every customer wants those goods to be shipped immediately before this deadline comes in. In the August itself, whatever we can put onto the boat, it has to be shipped out. There will be some pressure on the air shipments also, because it says that it enters the customs of US. So I think that clarity we will be getting. So these are the two pressure that will come immediately, because 50% is quite exorbitant and more like a staller, I will say.
No, so Pallab, if you send stuff now before 27th of August and it reaches US before the 17th of September, then it is exempt, right?
Yeah.
There are no tariffs.
Only the 25% would be
correct. The additional 25 will not be applicable. So my question is, will we see a big push? For example, I think we've seen this in previous instances, right? When something similar happened with China around Liberation Day, and they said tariffs are going to be implemented, there was a huge surge of exports into the US to beat the tariffs. I think
whatever goods are ready.
Whatever goods, of course, they have to be ready, and ships have to be available, right? You can't fly them. You have container space, etc. as well, ship space, etc. as well, right?
Absolutely.
But we've seen this. I mean, even with Apple iPhones, to beat those duties, I mean, there was the report that Apple sent hundreds of millions of iPhones made out of India into the US to beat that tariff deadline. You think we should expect a big surge between now and 27th?
So whatever the goods are in stock, most of the retailers are reaching out already to the respective suppliers and vendors to ship it out immediately. So that's already in motion.
All right, very quickly, I think 50% of your revenues from the United States, right? How much of it goes out from India to the United States?
So what we have been working upon over the last few years is to have this dependence on US to come down, because geopolitics and all these uncertainty is coming into play. So today we are almost like 50% from each region, if I have to look at it. India, this 50%, as of now, this particular year also, we are running at a run rate around that. So that has to be immediately now brought down further and goes to these other countries. And the other production, like my customers of Australia, Japan, So those are the production that will be coming into India. So this shuffling and juggling will be happening now.
No, so Pallab, what we're trying to understand is, let's talk about your revenue pie. How much comes in from the US market?
Approximately 50%.
Okay, so 50%. Now, as you go around changing some of the manufacturing bases, in the immediate next quarter, now, I mean, right now we are in Q2, Q3, will there be a revenue hit just because of this disruption? Just trying to get a quick near-term guidance.
So, our results are supposed to come out today.
Okay.
So, may not be the numbers, but what I would say is that what we are seeing, that immediately since the tariff got finalized for the other countries, so we saw a huge surge of demand in those places. Because business always looks for uncertainties and not uncertainty. So India is still uncertain because there could be some further negotiation. Things might change. But other countries, it's more or less things like for this next 5-6 months, it seems to be this is 19 or 20% tariff is already there. So what we are seeing is immediate surge of business in all other regions. India, we need to adjust. Some of the US production has to come out of India to other countries and have to be, the same capacity has to be filled up by the other countries' production, which may be happening in Bangladesh, will bring it down to India. So that's the juggling that will happen. It's a short-term pain. And of course, I think with the strategy that the US administration has been taking, I would say the uncertainty doesn't end here. So we might see more changes in the next month and so.
Okay, all right. Pallab, thanks very much. Good getting you back and sort of getting that clarity with regards to what can happen. But this is all very fluid, right? I don't think anyone expects this 50% to be permanent. We'll see this going lower. I think GIFT Nifty came up on your screen indicating a 75 odd point lower start. Dharmesh Kant is with us, Head of Research at Chola Securities. Dharmesh, good morning. Good to have you here. As far as individual stocks go, what's on your radar? 2 or 3 names on the back of earnings or, of course, all this tariff-related news flow. Dharmesh.
Yeah, good morning, Prashant. I think domestic centric, focus companies should be looked into. And there, I think Hero MotoCorp and Bajaj Auto came out with numbers. So we are, bullish on the two-wheeler space. Hero MotoCorp, we have discussed earlier. But the numbers to my mind was very good. If you compare that to Bajaj Auto. And the reason being, if you look at Hero MotoCorp, there was around 11% decline in the sales volume, the bikes being sold in the Q1. And still they managed to, come out with a higher operating margin and around 2 to 3% kind of a decline in profitability on a pro forma basis. And the July numbers and June numbers of the bike sales were fairly encouraging, around 21% kind of sales growth was there. Keeping this in mind, and if you compare this with, say, Bajaj Auto, which came out with decent set of numbers, but the volume growth is missing out there. It's only hardly 1% kind of a volume growth was there. And July numbers were for dismal, 3.3% kind of a volume growth. Going forward, their con call suggested around 5 to 6% kind of a volume growth. So that is a bit scarier. So I think like by like comparison, Hero MotoCorp looks a good value buy. It's trading at 19 times 1 year forward PE multiple, where Bajaj is at 30 times 1 year forward PE multiple, with ROEs of Hero MotoCorp and Bajaj Auto both at same place, 23 times of PE multiple. So going into the festive season, this time even, Ganesh Chaturthi is being advanced into a month of August. We think that 5 lakh kind of a run rate is very much likely for Hero MotoCorp with export sales. So we are going with a green on Hero MotoCorp for this season. So that is one area which we are finding quite interesting, along with Mahindra & Mahindra.
Okay, Hero MotoCorp and Mahindra & Mahindra. Dharmesh, those are the 2 stocks that you like from the auto pack. Got that? Stay with us. For the time being, we'll slip into a short break. We'll continue our chat with Dharmesh. We'll also get you some trading ideas. Don't go anywhere. Well, we've had a lot of new age companies that have come in with the IPO, and after a while from the old economy, we have JSW Cement that will be opening for its issue today. That's the IPO issue. The price band comes up for you around 139 to 147. Implied market capitalization will be around 20,000 crores. What's the total fund they're looking to raise? It's around 3,600 crores via the IPO route, and out of that, the fresh issue is close to around 1,600 crores. OFS is around 2,000 crores from investors. The promoter holding, because of the dilution, will come down because of the dilution from around 78% to around 72%. Why are they raising this money? Part of the money will be used for their capacity expansion. At Rajasthan, remember, they are expanding capacity out there. The total cost of the project was ballpark 2,500 crores. They've already incurred close to around 1,250 crores. So close to around 800 crores will go towards this. The remaining of the money, some part of that will be going for debt repayment. Close to around 520 crores. As of the last reported number, around 4,200 crores is what their debt is at. So close to around 12-13% of the net debt will get reduced. They have exposure majority to South India and parts of West as well as East India. They've already said they're around 20.5 million tons, which is going to double in the coming years. And most of it will be organic in nature. If we're looking at their numbers for the past year, last year for the industry itself, it was a weak year for the industry. So they reported net loss. Their operating profit as well came down. But for this year onwards, things actually will look up for the entire industry, and for JSW Cement as well will be no different. Valuation-wise, it's not coming at very, very cheap valuations. JSW Cement, their price, they are issued at quite a elevated level, because on an EV per ton basis, it's more than $120 per ton, and even on EV upon EBITDA, it's close to around 19 times. We know the group pedigree has been such where they've created wealth. Whether you look at steel, whether you look at energy as well. But we'll have to keep an eye out on this one. For the time being, this year will be a far better year. They'll reduce debt. They're looking at capacity expansion as well. Dharmesh, what do you make of this issue? Did you have a look at it? I was at the conference, and Pa Jindal very candidly said at one point of time they were thinking of selling it. Then he came in there, he turned it around, and today it's a 20 million ton plant. What's your view on this issue, and what do you like from cement?
Yeah, good morning, Nigel. I mean, the issue is fairly priced. It's not very attractively priced, if I may say so. And the horizons are good. I mean, they are talking about doubling of capacity and all, but the concern remains of the geographies in which JSW Cement would be operating. So primarily into South India, which is already supplied with over capacity, and then the East India, where the competition is fairly high. And their UltraTech has been, fairly robust in gaining the market share. So it has to be seen how, effectively they are able to gain market share in the East India geography. At the same time, the gap between the clinker and grinding capacity is way too high than the industry standards. So around, clinker capacity is 40% of the grinding capacity. Usually it is at 60% or so. So that means they will be buying clinker from the market. So these are our 2-3 concern areas for JSW Cement. So we are giving it a pass as far as, IPO is concerned. We'll see how the performance happens, and then maybe we can have a coverage on this. As of now, it's more of a neutral to a slightly negative bias on this IPO.
Got it. Okay. All right. That may stay with us. We'll take a short break, come back. Technical experts as well will be joining in.
Welcome back. Let's quickly take a look at some of the Asian markets. The color is a little more mixed. When we started off at 7:30, it was a wide sea of green. Now, not so much. Look at the Hong Kong market. It's quietened down. China's flashing a little bit of red. The Japanese market, however, is the best performing across the region today with a gain of about 0.7%. Let's get the implied open up. Last we saw it was about 70 points lower. Yeah, still 70 to 75 points lower. That's the indicative start. Let's take a break. We'll come back with the trading setup and more, of course, trading ideas for the day.
Okay, welcome back. There's about, a minute to go for the pre-open session. And the pre-open, actually, we will spend a minute or so looking at the rates, etc., would start to come in. But let's get Sudarshan Sukhani and Mitesh Thakkar, who are with us, with what they'd want you to do as far as trade is concerned. Gentlemen, good morning. Good to have both of you here. So we take what we get, and I think what we're getting is about a 60, 70 point, now what, 80 point lower start, Mitesh? How would you trade it? Is there a trade? And then we'll talk stocks.
Good morning, Prashant. So I think, the Nifty will most likely, the way GIFT Nifty is indicating, will open below or just around 24,500. Now, that's my support level. So I'm not in a hurry to immediately open short positions. But in case we see there's no recovery post the gap down opening, then I think you will look at some kind of negative trades. We already have some put spreads on the indices. I've been advocating maintaining put spreads because, one, this is an extremely sensitive market with the news flows, and therefore volatility could increase. And the idea is that it's a slightly safer bet, still give you advantage in case the move happens on the downside, which is what we've been cautioning against. So I think, let's see, 24,500 is an important pivot for me. In case we don't see follow through selling, then I think we might be in for a bounce back from these levels. In the last 5-6 days, on 2 occasions, we have bounced back from around 550, 500 zones. So I would not ignore this level.
Okay, all right, Mitesh, take that on board. Let's ask Sudarshan as well. Sudarshan, so the implied open has been indicating that it's probably going to be a 70 to 75 point lower start. Would you trade the index at all?
Yeah, good morning. Well, the Nifty has been in a correction of some kind. The idea was that maybe 24,500 could act as support. We have been roaming around this level for the last 3-4 days. I do not think this support is going to hold. You know, the markets hate uncertainty, and we are going to remain in an uncertain environment, not just for a day, but for weeks altogether. This also coincides with the seasonally weak months, 2 months, September and October. So I'm assuming that sooner or later, 24,500 will break down. We'll look for lower levels. I can't say what levels, but the drift is on the downward. So the trade in the Nifty is, if you see a rally, use that rally to build short positions using options, nothing else.
And you will short the Nifty at how much bounce, Sudarshan? How many points bounce?
It depends. See, from the open or from any low, if you get a 200-point bounce, that would be an excellent place to short it.
Okay, all right. Let's talk about a couple of stocks then. What are the trading ideas, Sudarshan?
Well, the stocks are mixed after many days. Otherwise, we were only having buying ideas. Hind Copper is a buying opportunity with a stop under 239. Oil India is a buy with a stop under 423. I have 2 intraday shorts. Marico, where you can consider selling above 729 with a stop above 729. And APL Apollo, where a short is justified with a stop above 1594.
Okay, all right, got that. Mitesh, morning, coming to you for your stock list of the day. What are you working with?
Yeah. So I also have a mix of buys and sells. Good morning, Subbu. On the buying side is Laurus Labs. See, after a good rally, the stock appears to have, kind of hit support level. So likely levels to bounce back. So buy with a stop around 822 for targets of 860, and you might get it a slightly better entry point with the gap down opening. Also on buying side is Pidilite with a stop below 3020 for targets of 3085. And on the sell side is Coforge with a stop at about 1665, look for targets of 1570. And Sun Pharma sell with a stop at 1616 for targets of 1555.
Okay. All right, gentlemen, thanks very much for all the trading advice. We'll come back to you a little closer to the open. The pre-open is here, and it's suggesting about 0.8% kind of a drop for the Nifty, which translates into a 200-point cut. Let's see. I mean, it's early in the pre-open. Let's see if this settles.
So they say, right? 1%, 0.8, 1% to banta hai. Itna to banta. Because if it, it's... otherwise...
नहीं तो 50% tariff का क्या मतलब है?
No, think about it, right? I mean, if the market actually is higher,
yeah,
and Trump switches on CNBC
TV India stocks rallying.
50 और लगाओ. No, I'm not joking. I mean, so the market behaves appropriately. Yeah. I'm actually half joking, but I'm saying if it is not, there has to be some reaction, right? There has to be. Yeah. So I think if we get away with 0.8, 1% kind of a cut by close, I mean that's par for the course.
I think we'll get away with that. But I think the rupee is open more or less stable, which is encouraging, right?
Yeah. So if you, I was making this point earlier, Nigel. If you looked at the overnight 1 month forward deliverables, that was absolutely flat, stable, nothing. No movement. So, and this is in line with
really heartening.
What is going on. Yeah. Maybe some stocks, etc., will come, which we will get. These textiles, these chemicals, and these. I mean, there maybe individually there perhaps will be some pain or whatever.
So, Avanti feeds 4% lower. Gokuldas is in pre-open is down 3%. Yeah. So these are some of the names.
I'll tell you what. Hormuz is standing by. He's got a list of companies that he's taking. Hormuz, break it down for us.
A lot of brokerages have written about yesterday's tariff announcements from the US president. I'll start off with Citi, and they mentioned that although these are still under implementation, if these 50% tariffs do get implemented, the average US weighted tariff will increase to 42.5% from just 13.25% currently. That will be a substantial increase, and as a result of which their linear model is suggesting a 0.6 to 0.8 percentage point risk to India's GDP. But the actual impact on GDP growth could be higher, because at this rate most of the exports will become unviable to the US. And This would also result in an impact on the current and capital account flows, and the currency markets could see pressure, which could result in the Reserve Bank of India leading to some forex intervention to stabilize the currency. Now, on the equity front, they mentioned that there is still uncertainty around the final outcome, and that could remain an overhang for the near term with regards to domestic sentiment. And they say that these domestic-oriented sectors, be it telecom, hospitals, staples, and insurance, they could act as potential defensive plays in a market like this. Now, Mahesh Nandurkar of Jefferies also wrote earlier this morning that the direct finance cost for India to replace Russian oil is less than 15 basis points of their GDP. And the oil market price movement over the last 1 week, which has been more or less flat to the downside, is indicating that there is enough supply that is still available in the global markets. And the political fallout is the bigger implication here because of the US demands for the agri sector and the dairy sector. But they still remain hopeful that sooner or later there will be a deal that will be stuck with the US. Now, when it comes to stocks and sectors, of course, we keep an eye out on textile names, as you mentioned, be it Gokaldas, Indocount, Wellspun Living, KPR Mills, and all of these companies get anywhere between 50 to 70% of their revenues from the US. The shrimp feed manufacturers, Morgan Stanley wrote earlier this morning that India's seafood industry is staring at huge losses because of this tariff implementation. Chemical names like Navin Fluorine, PI Industries, SRF, capital goods names Cummins, Thermax, KEI Industries, of course, and the auto component names Sora BLW and Bharat Forge. So a lot of sector-specific action potentially possible, but for now the pre-open though is suggesting some resilience for our own markets.
All right. Thanks very much, Hormuz, for that. Very interesting sort of list of companies that we have to we wanted to put out. 100 points lower, right? I mean, and 260 odd points lower on the Nifty and the Sensex. Now you could look at this rate and say, well, you know, this is a market is kind of ignoring it, or it's not really paying too much attention. Maybe that'll change. I mean, we're just sort of coming to the end of the pre-open session. But I think there's also the other element, which is the fact that, you know, this 25%, of course, is big and harsh and all of that, but it was promised. You know, something big was promised in 24 hours, and something big has happened in 24 hours. So, you know, in that sense, it's not a surprise for the market. So I think that is that is playing out as well. Sridhar Shivaram is with us, Investment Director, Enam Holdings. He's with us here in our studios. What a morning, Sridhar.
Thanks for inviting me.
So, what's the playbook here? I mean,
if anybody knows exactly
how do you even talk through this?
So I think the way you guys have also evaluated it quite well, that, you know, it affects a few sectors. They've specifically exempt a few sectors. So like pharma, electronics are out. My gut feel is that pharma will stay out. I mean, it's very difficult to precisely say, because if I look at what US is trying to do, and also the RFK Jr., who's the health secretary, they've been trying to bring down healthcare costs in the US by putting a 50% tariff or 100% tariff on generics doesn't really help their cause. So I think they also understand. So if you see specifically, certain segments have been exempt. So I think this is a give and take situation, but obviously some sectors do get affected. And I think the overall relationship has got affected more than anything else. And I don't know how that plays out. That is the thing to watch out. Maybe there are newer alliances which are cooking up. But I think this is not a good time from a market standpoint. There's so much of uncertainty right now.
Yeah. So there's no point talking about which sector or that sector, this sector. What do you think has gone wrong, Sridhar, in your opinion? I mean, you're a close watcher of global stuff. I mean, you know.
So what I hear, you know, from Delhi sources is that something changed after the war with Pakistan. And something related to, you know, the hill that we bombed. And there are rumors about some nuclear sites there. So it's not very clear, but something has happened there, because till the day before that, US said that we don't want to be involved. And the day after that, everything changed. So I think only, people in Delhi will know exactly what has happened. But if I look at chronologically from that day onwards, the tone of Trump also changed.
Yeah. This is the Kirana Hill bombing. And I remember we discussed this internally. I was discussing with a couple of people as well, that whether that'll have, and the position that the US took after that day, whether that'll have a bearing on trade or not.
I mean, this is my guess. Okay, I think something has happened there. We will never know the full story. But there are a lot of reports, floating around as to what was there in Kirana Hills. But I think that has changed, because it looked like India has a dominance in certain military capability, which surprised US and Europe. So whatever be it, that may have played.
You know, and also to Sridhar's point, I mean, just bringing it back for viewers' reference, the point on newer alliances. Yesterday, China's statement in support of Brazil and talking about the BRICS needing to be strong, a strong global south. I think it's a very, very interesting geopolitical times. But
so I think these are moving parts right now. We'll see how these things play out. But these are uncertain times for the market, and I think you can sense it in the market, right? It's not like our markets are running away.
There's nothing new, right? But it just makes no sense, right? I mean, at a logical level, I mean, you are, for years, what was the one big consensus in Washington, in the US, was that everybody, Republicans or Democrats, are anti-China, right? That was the only thing they agreed on. So
That's what I'm saying. What changed? I mean, chronologically, if I look at it, that is the only thing that changed. That something has happened there, which has spooked the relationship. And maybe it was an unwritten rule. We don't know exactly what has happened. I mean, we may never know what has happened.
We'll never know.
We may never know. But obviously from that day, something has changed. It is for the experts and others to, dig deep and find out. Yes. But we may have some, some stories for that. But will I know for certain? No. But something has changed from that day. And we can see that playing out.
All right, Sridhar, just hold on to that thought. I want to understand what do you think is the possible solution from here on. Come to you in just a bit. But let's get in Sudarshan Sukhani. Sudarshan, what's your 910 call?
So the 910 call is look to buy Hind Copper with a stop under 239.
Got it. Hind Copper is the one that you're looking at. Mitesh, what about you?
Yeah. I'll go with the buy on Pidilite for targets of 30.85.
Pidilite. Got it. Thanks a lot for that, gentlemen. We'll keep coming back to you all. It promises to be an action-packed day. Let's focus on some stocks, though. Vamakshi joins in because she's tracking BHEL, who came out with a set of numbers. Vama, take it away.
Well, Nigel, absolutely weak set of numbers coming in from BHEL. The revenue was flat this time around. When you look at the gross margins, they too have declined marginally by 14 basis points. But it's the other expenses that have more than doubled, or rather just doubled, to 675 crores. This has resulted in the company reporting an EBITDA loss of almost 540 odd crores, and the loss at the bottom line is has widened from around 211 crores in the same quarter last year to 455 crores. Keep in mind that the street was working with a profit expectation this time around, so therefore it's a big blow to BHEL this time around, and this is largely being led by their power segment. Keep in mind the revenue here has declined by 5.5%, and the losses here have widened from 53 crores to around 510 crores. On the flip side, when we look at the industry segment, that has done quite well, 17% uptick in the revenue, and the margins have improved from 4.67% to 19.37%. Apart from that, the ordering activity was quite robust for the company. It was up almost 42%, and the order book at 2.04 lakh crore was also quite healthy. In fact, came in higher than what the street was anticipating, but that doesn't take away from the fact that it's a dismal set of numbers, much below the street expectations.
Okay. All right, Vamakshi, got that. Actually, I'll reserve my question for post-market. I want to ask you, Sridhar, whether this is a bottom in terms of earnings pessimism, bottom in terms of the India-US relationship, but how much worse can it get, right? And markets love bottoms, but we'll ask you that question, I think, after the opening, because I think another 10 seconds we should get the rates.
I think let's just look at the GIFT Nifty, the Nifty, the pre-open, where it is finally, I think, settled at. I mean, the dollar rupee is flat, 100 points lower on the Nifty, so nothing, actually. We'll just come up with the first rates, and then we'll go across to Sridhar. So what do we have? First rates on the Nifty Bank, mid and small cap indices. Actually, mid and small caps looked absolutely smashed. I mean, the market breadth, just lack of interest over the last few days. In any case, so 1/3% lower on the Sensex. The Nifty, I think, is starting lower by about that much. 24,500. Nifty Bank at 55,300 or so on both those indices. Mid cap index is down 0.5%. The small cap index is down about 0.4% or so as well. So this is, the lay of the land right at the word go. Oh, wow. Just 70-point cut now coming through on the Nifty right now. So this is 1/3% lower. That's it. Bulk of what is starting right now on the Nifty heat map is lower, and you've got a few names which are higher at this point. And Sridhar was talking about some pharma Technology is there, but again, has been sold into quite heavily. Otherwise, about 40 of the names, 41 names are lower. Surabhi.
Okay, so 62 points lower. Let's see where the weakness is coming in from. Let's start with trend. Numbers came in. Now, the margin picture is better than estimates, but the top line growth is 19%. The market doesn't like that. So first reaction is negative. Bajaj Auto has been trying to reassure the street that growth will be fine. I mean, their domestic outlook is, I think 6-7% growth. Again, stock's still under pressure, 2% lower. Even Bajaj is talking about holding margins, but the market wants growth, and that seems to be missing. Let's look at what else. Kotak Mahindra Bank, where we're expecting big trades today and maybe some foreign investors cashing out. That stock's about 1.5% lower. There's Eternal, where again there's block action. That's anticipated. Eternal is also lower by about 1.5%. Tata Steel, Coal India, Shriram Finance. I'm just reading out the list of nifty losers. And then you have the biggies, Reliance and SBI, both exerting downside pressure on the market this morning. So let's see what's holding up. Not too many stocks, actually. Some buying on Cipla. Hero Moto is seeing some traction, 0.5% up after its numbers. And there's a little bit of a trickle here and there on Nestle and ITC. But the short point is that there is no real leader index or any sort of a counterweight sector today. It's largely soft and somber. And the Nifty is trying to, put up a fight at 24,500 now. Nigel.
Well, the stocks that are getting knocked are the usual suspects, right? Wellspun Living, that stock is pulling back in today's trading session because obviously US market's a big one for them. It's already seen a lot of selling pressure in the last few days. That continues to be the case. Gokuldas Exports, that's the other one that's getting a bit of a knockback. What else is losing out? You have Prince Pipes. They came out with a set of numbers. So the time being, the street doesn't like it. That stock is down more than 5%. Volume's pretty large on that one. JSL Stainless, actually the numbers look good. The problem is the global uncertainty. And remember, exports for them were around 16-17% till around, I think, 8 quarters or so ago. That number's come down to sub 10% for the last many quarters. We'll have the management later on during the course of the day. Stock goes on with a cut of around 4.5%. What's the way ahead? How can they mitigate the losses on the export front? So that's another stock. Sarada Energy, that's the one that's been running along. One of the best results of this season, I think so. And we had the management speaking to us here exclusively on CNBC TV18. They're talking about the EBITDA number go up by more than 40% in FY26 with debt reduction. So that stock continues its upward journey. Rain Industries is another one that's reacting favorably to its numbers. So that stock as well is up. I'm looking at the Lumax group of stocks. You have Lumax Auto actually. That is higher in today's trading session. So that one in fact has moved up smartly. While you have Lumax Industries, I think that came out with a set of numbers. That's down close to around 6%. So both those two going out in opposite ends. Sanghi Movers, that's another one. The renewable play, the cranes play are out there. That's seen a sharp correction from the recent peak, but for the time being, it's popped up close to around 4.5%. And Godfrey Phillips, a stock that we here on CNBC TV18 had given you a heads up. When Philip Morris came out with its set of numbers, the commentary wasn't great on the whole, but the commentary on India was good, which gave you a bit of a read-through. And that's why, in fact, that stock, it opened up. And now, in fact, after the big run that we've seen, more than 10% move is what we've seen in the last few trading sessions. Well, that one has come in for some mild profit taking from the high point of the day. But down only 60 points. For the time being, it appears the street is digesting that peak Trump tariff tantrums are behind. At least that's what it appears like.
And that was the question, Sridhar, if I can go back to it. Yes. I mean, how much worse can it get, right? Earnings, Trump tariff tantrums. Are we close to bottom?
So we've seen I would say a time correction for almost a year now. You look at large cap, mid cap, small cap, almost all of them have been flat to mildly negative. And I think if you go back a year before that, which is exactly a year back, the consensus was that we had a very strong run up. And we had earnings disappointment which came through. I think the earnings disappointment may continue for maybe another 1 or 2 quarters. Finally, it's only when earnings start to come is when we see the markets go up. We may see some more time correction maybe for another 3 months. Very difficult to gauge this. I do expect that second half will be better, which is festive season starts early this year. So you could see a slightly better outlook. Also, what I'm gathering from my Delhi sources is that some big announcement on August 15th. I don't know what, I have no clue, but this is what I've been told. Some big announcement on August 15th. Obviously, if you see the Twitter feeds of various people, they're talking of some reforms. I don't know what reforms, I have no idea, but I hope the government wakes up because we haven't seen any reforms in this term. So hopefully it's overdue, and we always do well when we are faced to our backs facing the wall.
You know, one of the I remember speaking to two economists based out of the US, and both one was from Princeton, the other one was from another university. And both actually were saying that maybe this will force, it'll kind of watch exactly what you're saying. I mean, us to do things which needed to be done. Maybe it's an impetus, which is not necessarily in the long. It looks tough now and looks it's like, you're forcing us to do it, but in the long run, it doesn't hurt. Actually, it perhaps helps. Pankaj Tibrewal is with us as well, founder and CIO at Ikagai Asset. Pankaj, good to have you with us here on the program. Thanks very much. What is your assessment? I started by asking Sridhar, how do you even sort of talk through some of this 50% business? What is your sense on markets? Let me actually put it in a very sharp way. Is this likely to today is absolutely steady, nothing really, but is this the way you think it'll likely be, or slowly, this kind of starts to seep in, worry? As Sridhar also pointed out, even if this 50% eventually is negotiated lower, the broader question is the relationship perhaps is soured and that needs repair. And foreigners have been big sellers, right? $10 billion this year so far. So that's the question, Pankaj, for you to start with.
You're on mute, Pankaj.
Yeah. So, Prashant, if you look at tariffs, 25% or 50% doesn't matter, because no businesses operate at such high margins that they can absorb 25% or 50%. So it's a number. But what it brings is a lot of uncertainty, and markets don't like uncertainty. And I think my sense is that we have to look inwards. And as Sridhar mentioned in his earlier remarks, that we haven't done anything on the economy side from a government perspective. I think it's time to probably think inwards and start doing the reforms, because if you put numbers into perspective, our senses, excluding pharma, electronics, others, $18 billion of exports get impacted. And that's roughly about 0.4% of GDP. How do you negate that? I think it should be the brainstorming which should be happening among corporate India as well as government. And I think this is the time to escalate going forward. Look at what China has done in the last 3 months. There was pressure on tariffs and other issues, and they have moved into the anti-deflation mode. And last 1 month to 1.5 months, all commodities are climbing up massively, whether it be coking coal, polysilicon, and they are announcing projects which the world hasn't heard of. The latest hydro project, $170 billion. And so many other projects will follow it to it. I think we have that appetite to do as well. So in the near term, I think uncertainty will be large, but I think markets are behaving very maturely if you look at for the last few weeks. But one thing to note, Prashant, this is not an easy market. Market breadth is narrowing down substantially. The easy money which we saw for the last 4 years, I think is behind us. I think markets are rewarding growth and earnings over a period of time. And if you look at the last 1.5, 2 months since the market has been correcting, there are only few pockets which are performing. Otherwise, it's a very, very tough market to generate returns.
Hi, Pankaj. Good morning. Good to see you. And it reminds me when I used to come home from an exam and Dad used to ask, how was the exam? I used to say it's difficult. He said, exams are meant to be difficult, Nigel. But this market's tricky. And you have to look at, various segments. I think one segment or one piece that you have liked is chemicals. I recall a few months ago, you had called out for the bottom. And from there, actually, quite a few stocks have done well. Would that be one of your top themes that you still believe presents an opportunity?
Yes, I think, Nigel, if you look at the overall chemical segment, barring the uncertainty in the near term, there are two big macro developments which are happening around the globe. One, I think China, as I mentioned, has moved into the anti-deflation policy, where chemicals has been one of the sectors where they have created enormous capacities. And if you look at in the last 1.5 months, all chemical prices have started to inch up, and it's the government dictate that please close down excess capacities in China. So that's a very, very important point to note. And the second important point to note is that the large chemical companies out of India cater to agro. Very few cater to pharma. And from an agro perspective, for 3 years, we saw a destocking cycle happening. Our sense is that that's coming to an end. and probably the order inflows and the demand from agrochemical side will start to escalate. And the third most important is that we are calling for a Europe upswing in the economy. Our sense is markets follows first, economy follows later. And in Europe, we are seeing that unification of many countries in Europe after this Trump issue coming together. And could be that CY26 could be a surprise for European economy. Early green shoots are to be seen. And if that happens, the agri-related sector can do well. And a lot of chemical companies catering to European markets can also do well. So our sense is that chemicals is one area where we believe near-term uncertainty related to tariffs definitely there. But if you take a slightly longer-term view, I think many companies have created that moat around them. And for the next couple of years, we believe that the earnings growth will be far better than the overall average market growth.
See, if I was copy editing or writing a sales side note, I would call it the Braveheart call, right? That is Pankaj's Braveheart call for the morning. Go with chemicals, look through the noise right now, the tariff noise, and it'll serve you well. But Pankaj, what else? Good morning, by the way. What else? The thing with the market is that the no-brainer trades are not working. Earlier, when there was market uncertainty, when things were off, you would go buy pharma and IT. But now people are very scared to do that. And you'd go buy financials. But look at the first quarter earnings season. There are asset quality issues. Credit costs are going up. Margins are under pressure. So then give us some more names, because the no-brainer segments are confusing right now.
So, Surbi, if you look at our senses, whatever the weakness in economy you are seeing is because of the tighter policy we ran till CY24. And whatever good has happened by RBI and our regulator in the last 4-5 months, you will start to see pick up from September to December quarter onwards is our call. There will be one more quarter of pain on financials, largely the private sector banks, because of the NIM pressure. But third quarter onwards, as the deposit starts to reprice, we will see better earnings growth. And FY27, if you take Nifty as a whole, banking sector will be one of the biggest contributors in terms of earnings growth. The second, our sense is consumption. Though consumption is weak at the ground level, but early green shoots have been started to be seen. Even managements on their conference calls are calling out that rural is doing well, and earlier green shoots are to be seen on the urban side also. So consumer durables, small ticket purchase items, I think all should start doing better as you move ahead into Diwali, Dussehra, and the festive season. So our call is consumption should be one space, especially the discretionary names. And the second part could be financials. You have to bear one more quarter of pain in financials, but December quarter onwards, I think the NIM pressure will subside and asset quality at its peak. I think you will see better times, and credit growth, which has come down to 9%, should start moving to 11-12% is our sense. So these are the pockets where we see opportunity coming in. And last but not the least, I think the pharma and especially the domestic and the CDMO place, I think that's clearly an opportunity whenever market is offering decline in this uncertain environment. That's one other area we should be focused on. So that's broadly is the thought from an overall sectoral perspective. But let me again give you a caveat that this is a stock pickers market. In this earnings season, we also saw the dispersion within the same sector is very, very high. One company is reporting 25% earnings growth, other is reporting a 20% earnings decline. So you need to be very, very focused on which companies you are betting, which promoters you are betting, which cash flows and balance sheets you are betting. In this really next 1 or 2 years, uncertainty, I think managements will play a major role.
Sridhar, you have any likings, anything you'd want
I broadly agree. It's a bottom-up stock pickers market. But broadly, I would say the same. Wherever you have earnings, like power equipment is a space that we like. EMS is a space we like. But they're all very expensive. But they're also showing very strong earnings growth. So they're showing 40-plus earnings growth. So I think market starved of growth. So wherever you're seeing growth, people are just hanging on to it with whatever valuations.
Actually, the other day, we were just counting in the studio areas with 15-20% growth visibility. Hospitals, there's power equipment and capital market, right?
Yes.
Which is asset management.
Yeah, which is the other interesting space.
Space.
But it's a cyclical space, right? So you will see ups and downs. But if you remove the cyclicality from there and you say, I'm going to hold for, say, 3 years, 5 years, and you assume that markets give you 12-13% returns, then they will have that sort of earnings growth there at least, plus the volume growth of newer people coming in. So it looks interesting, but it's not a straight line. That's what you have to
You know, I know, Sridhar, you look at pharma very carefully. So where are we at? Will we get these tariffs on pharma or no? Because it's not... You heard that interview that President Trump gave to CNBC US, right? Towards the end, actually, he said it's coming within the next 1 week or so.
Yeah.
And he said, I like to call them excluded tariffs. This Section 232.
So I'll be very surprised. As I said, I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic, pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. So it looks very difficult for me that it can be done.
You own pharma names?
We do own pharma names, and we like pharma names. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of, margins in India.
Absolutely, and that's a point that I think a lot of the pharma companies have been making as well. They can't overnight replace. And I think Indian drugs comprise almost 40-45% of the total pharma market in the US. So it's a huge number. You cannot replace it overnight. So we'll have to wait and watch. Thank you very much, Sridhar. Great to have you in the studios today. And thanks to Pankaj as well for joining us. Short notice, but we live in very, very interesting times. So really great that both of you could make it, to us for this conversation. Well, with that, we'll get to some corporate commentary and corporate conversations as well. Quick glance at the market. The market's absolutely fine. It's just 34 points down on the Nifty. To Prashant's point, if Mr. Trump is watching, he'll be very disappointed, saying, what is this? Indian rupee is not falling. Indian equities are also not falling this morning. What are these Indians up to? On a lighter note. Anyway, let's talk about Torrent Power. We're looking at the company's Q1 performance. We have, what looks like a bit of a muted start to the year for Torrent. There was, of course, lower power demand. That seems to be an overarching sort of overhang on many power producers. We have Saurabh Mashruwala, CFO of Torrent Power, joining in. Saurabh, let's start right there. How much of this Q1 subdued sort of numbers, how much would you attribute it to just lower power demand? And do you see signs of a pickup?
It is mainly because of the early onset of monsoon, as well as the higher LNG prices. It has impacted the Q1 of the Torrent Power. Same is the impact with the other producer also, particularly in terms of merchant power. But going forward, we have a contract with the NVVN, which is about a 6 month contract. So partly this contract is being used in the Q1 quarter, and the balance contract will be used in the Q2 as well as Q3 contract also. So hopefully, and the merchant demand is all depend on the weather condition and how the weather pans out in India. So that will impact the merchant power. So, but we are hoping that this NVVN contract, which is being utilized in next 2 quarters, will be helpful to us in terms of merchant power.
Can you give us some numbers and some rates we can work with? In general, I mean, are you expecting improvement in spot prices, and also on your merchant tariff side? Where were you at the end of Q1, and as some of these new contracts come on stream? Overall, your realizations on the merchant side, how will they shape up?
So it is up to the expected leveling, I would say. But going forward, it will all depend on the demand supply situation, particularly the peak power. I would say peak power deficit. I would say it will all depend on the peak power deficit.
Okay, all right. Hi, Mr. Mashruwala. Good morning. Good to see you, Ben. What about inorganic growth? There are various reports that indicate that Torrent Power is looking at L&T's power business, the Nabha project. Any truth to that?
We can't comment on the speculation at this moment.
Do you want to deny it?
No, we can't comment on this. But we can always, we have an expansion plan, our own expansion plan. We are growing in renewable. We have about 1.8 gigawatt renewable capacity currently. We have about 3 gigawatt renewable capacity under construction right now, which entail investment about 20,000 crores. We have a storage expansion plan, pump storage expansion plan of 3 gigawatt in total investment of 14,000 crores. We are also, as you know, we are also in the distribution side in franchises or licensed distribution area.
So, sir, we'll just get back to your expansion plans, which sounds very interesting. So, do you think L&T's, power project could be a strategic fit for y'all? we'll have to see how interested you all are, but that could fit in well strategically.
We are looking at coal asset also, either greenfield or brownfield. So that is in the investment horizon, I would say. So, but it's too early to comment on this Nabha power project right now. But so we are definitely interested in having a coal asset, either greenfield or brownfield.
And how much would you be willing to pay, or if you have to give it on a pay per megawatt or something on those lines? What would be attractive if you have to set it up by yourself and if you have to buy it, from the inorganically?
It depends on the quality of asset. It depends on many factors, I would say. It depends on the quality of asset, PPAs, balance period of PPAs, coal linkage. So we can't put any set numbers, I would say.
No, okay, so let me ask that question slightly differently. From a balance sheet perspective, Saurabh, just give us an update on the balance sheet, even cash levels, and if you have to take on debt to acquire a large thermal asset, how much debt would you be comfortable with? What is the kind of the size of an asset that right now you think you'll be able to digest? Because you made it very clear that you want a coal-based asset, in your portfolio.
Yes. So as far as balance sheet is concerned, we have a very strong balance sheet. We have about net debt to EBITDA of 1.4, which is very, very strong, I would say, which is very, very comfortable, I would say. Debt equity ratio is 0.40, I would say, which is unheard, I would say, in terms of infrastructure company. So balance sheet side is very comfortable, and which can take up a significant quantity of debt also for the expansion project. In fact, we have 50,000 crores expansion project under pipeline. So where we generally borrow 70% of the debt. So balance sheet is quite comfortable, I would say, to take up the debt.
So by when can we hear of something, this inorganic plans on the thermal side? By when? Next couple of months?
So we are working on many opportunities, I would say, in the renewables side also, in coal also. So it's an ongoing process, I would say.
So for this Nabha project, so the reports indicating around $1 billion. Do you think that would be a fair estimate for whoever is buying it? May not be y'all, but you have to put a rough value to it, given its strategic location, given the quality of the asset. Could that be a fair number?
We can't put any numbers on it right now.
Okay, let's, you're not putting any number on it. So let me talk about your regular organic growth again. I'm going back to the merchant side because a lot of the street experts also point out that lower merchant contribution led to the slightly soft performance in Q1. Can you give us some update? What is the kind of volume you'll do? How are merchant tariffs shaping up? And basically, what can we expect from your merchant business? How much more growth volumes going into Q3, Q4?
So we can't give the guidance. It all depends on the weather patterns, weather condition, I would say, in the country. And particularly, as I said, the NVN contract is a 1.3 gigawatt contract we got. It's spanning into 2 quarters, I would say. So Q1 contract was partly utilized. The contract will be fully utilized in the going Q2 as well as Q3 also.
Just for the sake of clarity for our viewers, this MVN contract, this is in Maharashtra. Can you just elaborate on which contract this is?
It is as sourcing power for the meeting the peak demand, peak requirement, I would say. Some crunch period demand, I would say.
Okay. So this is going to take your overall realizations and volumes up by how much?
About 1 billion, 1,000 MUs contract, guaranteed MUs they have to pick up, they have to take. So this is a guaranteed amount. That contract will be utilized in Q3 as well as Q4, Q2 as well as Q3.
Okay, all right. So what about your CapEx plan? Could you break it up for us? You mentioned a couple of big numbers. For this year, how much will it be? And for FY 26, 27, 28, break up your CapEx plan for us.
So CapEx plan, we are expanding our renewable capacity from currently 1.8 gigawatt to another 3 gigawatt, which will be commissioned in the next 2 to 3 years, and will be a CapEx plan of 20,000 crores. We have one contract with MSCDCL, home storage contract with MSCDCL in Maharashtra, about 2 gigawatt, but we are setting up 3 gigawatt home storage capacity with an investment of 14,000 crores. That project will come up in the next 4 to 5 years. As you know, we are in the distribution area also, from license distribution area, from distribution area. We are also looking for new acquisitions of new areas also in government for privatization, and in UP as well as in Maharashtra. So that also we are keenly interested. In distribution side also, we have CapEx plan about more than 15,000 crores. All put together, about 50,000 crores capex, committed capex spend, I would say, is on the horizon. Additionally, we look at the coal asset also, either greenfield or as well as brownfield also.
Okay, all right, Mr. Mashruwala, we'll leave it on that note. Thank you very much for joining in and giving us some perspective on your business. That's Torrent Power at the end of the first quarter. We need to take a very quick break. On the other side, we will get chatting with the exporters of India. Sudhir Sekhri of Apparel Export Promotion Council and Vipul Shah, former chairman of the Gems and Jewelry Export Promotion Council, will join in to discuss the implications of Trump's tariffs on both gems and jewelry as well as textile and apparel exports. Welcome back. So the market's dealing with a cut of about 0.3% for the time being. Mid-cap index little better off the mid-cap. So there's no major slide. That's the short point. The market's trying to digest all this news. And let's see if we get buyers further on in the day. For the time being, let's try and understand the impact of these new tariffs and the additional tariffs that have been levied on India on both the apparel and textile industry as well as the gems and jewelry sector. We have Sudhir Sekhri, chairman at the Apparel Export Promotion Council, joining in. And we also have Vipul Shah, former chairperson of the Gems and Jewelry Export Promotion Council. Gentlemen, thank you very much for being here with us. Mr. Sekhri, let me start with you. Now, for a moment, if I say let's forget 50%, let's leave out this additional oil penalty. Even if we're working with 25% tariff, Indian apparel and textile exporters, does it make the business in the US totally unviable, semi-unviable? What happens? I mean, and what do you expect in the next couple of days in terms of just the conversations with US buyers?
Well, okay. The 25% that was imposed earlier, we had, started speaking to our buyers and the government, of course. And we had, we were able to find a way out of it. Because we thought, the consumer, we told the buyers that the consumer should bear part of it, the buyer should bear part of it, and the exporter should bear part of that. And we were arriving at some kind of an agreement, even though it was very devastating. But now this additional 25% tariff is really will break our backs. So this is something which, whether it be small exporters or large exporters, nobody can bear this. And the buyers have already started walking away. Let me be very honest. Since the last 2 days, buyers have they cancelled orders. They've asked to stop orders, whichever are in production. And they have clearly said that they were moving back to China. This is
Okay.
going to be horrible.
We take your point. We take the concern on board, sir. So what you're saying is last 2 days, some cancellations have started happening. But otherwise, if it was just 25% tariff, you tried to work out a sharing formula of sorts that everybody picks up a part of the load. I believe there were some conversations as well with the government on higher duty drawbacks, some more incentives. Can you just elaborate on that? What is your ask from the government right now?
Well, you see, AEPC had requested the government for some direct fiscal intervention. I cannot specify what exactly it is, but we had asked them to support us directly through certain schemes. And of course, the scheme that I can talk about is the interest subvention scheme, which the government has withdrawn. So we had asked the government to reinstate that. And besides that, some other schemes. We also spoke about, the ROCTL and ROTEP being extended for the next 5 years, which the government has agreed. But that is something which is very small. That will not really help us with that 25%. So what we are looking at is more support from the government. However, let me also be very candid that it is, I think with this 25% additional tariff, even the government cannot support us. The only way out is now for government to start negotiation with the US government to somehow, remove this additional 25% tariff. Because if that doesn't happen, and I mean, this has to be, and this also has to happen like yesterday, because
right.
Our spring-summer orders are usually placed in the months of August and September, and we cannot even wait for the 25th August US delegation to come to India and then resolve this problem. This problem has to be resolved now.
Mr. Sekhri, a couple of questions. First, will you be able to reroute your exports to other markets like UAE, Europe? Have you already started speaking to other countries in GCC, ASEAN, Africa? Are you going to be looking at that more seriously?
Okay. See, let me explain to you. Out of that 50, I'm talking about apparel here. Out of the $16 billion that we export apparel, about 5.2 billion goes to the US and about 7.8 billion goes to Europe. The other goes to smaller countries like UAE and Africa, etc. Now, this is US export is a major chunk of our business. Now, what we see here is that if we take textile and apparel together, this is about $10 billion. And with this 50% tariff, we clearly see the next 2 months, about $5 billion of worth of business is going to move out of India. Now, to come back to your question of looking at alternate buyers or countries, yeah, I mean, that's a process. That's not going to happen tomorrow. I mean, to get onboarding onto a large retailer takes anything from 1.5 years to 2 years onboarding itself. I mean, to be on the vendor matrix. So that's easier said than done.
Okay. And just one more point to complete the loop, because as of now, the expectation still is that this 50% tariff is more of a bargaining chip rather than a fixed policy, and ultimately the tariff rate could end up lower. So just for the sake of simplicity, if you assume 25%, what would be the expected sharing between you, the buyers, distributors, and the consumers?
Okay. You're talking about the earlier 25%, right?
Yes, assuming the tariff settles at 25%.
Okay, yeah, let's keep our fingers crossed and we assume that, we hope that this happens. But that 25% that was, we were hit with earlier, that we had started talking to our buyers and we had asked them to split it 3 ways. One third would go to the consumer would bear it. 1/3 would be borne by the buyer. And 1/3 would be borne by the exporter. And out of the 1/3 to be borne by the exporter, we would go to the government and ask them for some support in some form or the other. Because you see, even that 1/3 works out to about 8.33%, which again is much higher than the net profit that a garment exporter makes.
Okay, that's on the apparel and textile side. Let's get to Mr. Vipul Shah as well. Mr. Shah, if we talk about all of our gems and jewelry exports, then US is a very huge destination, right? If you could just appraise us of the latest numbers as well. And what happens here? What happens at 50%? And let's assume 50% will not stay. There'll be something changing. But at 25% tariff, can it be entirely passed on to the buyers?
Yes, good morning, first of all. And yes, it's a big catastrophe for the industry, for the gems and jewelry industry as a whole. We work on very low margins, and it's a very labor-oriented industry as such. With 10% baseline tariff itself, we were struggling. And effective from today, it's going to be 25%, which we have not yet absorbed. And on top of it, we are hearing this news of additional 25%. So the industry has come to a standstill. We don't know, and we will be figuring out what exactly would be the next step. Because the gems and jewelry cannot be going into this kind of tariffs, and the business to US will be completely standstill.
Indeed. Have you spoken to any of the companies, sir, in the gems and jewelry space? Are you also hearing about orders being cancelled, buyers walking away? I mean, what's the extent of pain we will see?
Yeah, see, the majority of our exports to US, that's in the form of studded jewelry, goes from SEZ. That's almost approximately, say, $7 to $8 billion of exports was going from there. So all the orders right now are on the standstill, because until now it was 10% baseline tariff and some kind of activity was taking place. But with 25% kicking from today, all the orders were standstill. And now with this 50%, it is a no-starter. So we don't know exactly. So for some time, we have to just wait and watch what's happening, what's going to hit next, because then only we'll be able to start thinking how do we move forward, because we need to see our competitors, like countries like Vietnam, Turkey, they have lesser tariffs than India. So maybe in coming months, if things are not sorted, industries will start moving. That's going to be a big blow to our employment. So I'm seriously looking for the support from the Ministry of Commerce. I'm sure they will be looking into this industry very closely and try to take some appropriate steps, what they did in COVID times.
By the way, we're getting statements from the Prime Minister, and that's the first line that we have. Just going to see if we can get a transcript and more on this. The first line is that India is not going to compromise on farmers' interests. It takes us back to the crux of everything that we've been discussing with experts right from the morning. The reason why this deal is stuck is that there seems to be no give up, no let up from the US side on the critical issue of dairy and agriculture. And there's a lot of political pressure also obviously building in, saying that India should not back down, ready to face whatever it takes to protect interests of farmers. There you go. You've got a statement now from the Prime Minister himself. The MEA statement yesterday was quite measured. The MEA statement said that India will do what it needs to do to protect its national interest. And the Prime Minister now seems to be spelling out that national interest very, very clearly, that we are ready to face whatever it takes to protect the interests of farmers. And India is not going to back down on at least the agri piece, agri and dairy. That's what it looks like. So for all the participants in the market and all the commentators and everyone who's hoping for a deal to happen immediately, the oil piece, yes. The oil piece perhaps can be dealt with, can be negotiated. India has already stated its position of buying more LNG, buying more oil and gas from the US. That can still perhaps be discussed and debated. But it seems from this statement, it's very, very clear that farmers' interests are sacrosanct, they're paramount, and India does not want to cave in, at least on that one piece. So we need to see, even if the 25% oil tariff goes, will India still have to deal with a 25% tariff overall from the US? But I don't think the last thing has been said to this, which is why I've always been saying that I think we need to be a little cautious in terms of assuming that this is going to be immediately resolved. These things don't work that way. Negotiators have been at it for 4 months now. Clearly, there are some issues which remain stumbling blocks.
Well, that's right. Our Prime Minister standing up and saying, I'm going to hold on to my stand. I'm going to be protecting our farmer community out here and taking that stance. So now all eyes on what we can work out with the United States with regard to oil as well as defense. Absolutely. Maybe some kind of negotiation on that front. So that's the latest statements. We'll keep getting you what our Prime Minister has to say. But it's not been such a bad morning going by the overnight news. Mitesh joins us. Mitesh, not so bad as of now, but what is your trade on the Nifty? And then fill us in with a couple of your trading calls.
So, Nigel, you said perfectly, not so bad. In fact, it's not a market which is falling freely. It's managed to bounce back a bit. But again, I would want to see if the closing is about 24,500 and we are right there. So we'll keep a watch. On the stock side, I have one buy and one sell. CG Power is a buy call with a stop just below levels of 675, 674 for target of 706. And Kotak Bank is on the negative side. Sell here with a stop at about 1990 for targets of around 1935.
Okay, all right. Thanks a lot for that, Mitesh. Well, I'm tracking Jindal Stainless and the numbers were very, very good. I stick to that. You know, if you look at it on a sequential basis, the volume numbers are more or less flattish. On a year-on-year basis, though, it was much higher. The problem is yesterday, intraday, the stock from being down close to around 2%, it had ended with a gain of around 2%. So it appears there was an element of pre-positioning out there. And because of the overnight news with regard to tariffs, that's what's hurting sentiment. But let's pull up some of the graphics with regard to how the numbers were. That's the volume number. Good growth is what you're seeing on a year-on-year basis. And most of the top line growth has come in on a year-on-year basis because of, of the higher volumes. The EBITDA number, though on a year-on-year basis, it appears just a little bit better. The margin improvement is something that you like on a sequential basis. So just take a look at the way the margins have recovered. Last quarter, they did around 10.5%. This time around, it's a recover to close to around 12.8%. Even on an EBITDA per ton basis, the entire realization gain of around 4,000 rupees per ton, that's come down to the EBITDA per ton as well. So realization gains have flown down. So you like that at around 20,000 rupees on a per ton basis. The debt number is more or less constant in spite of going in for some capex. And one of their subsidiaries, which is JUSL, out there the operational performance as well has improved. So the reason the stock is down is because maybe an element of pre-positioning, maybe some uncertainty on the tariff front. Given that their export contribution from around 17% or thereabouts around 8 quarters ago, it's come down to around 9%. So they'll struggle on the export piece, but otherwise these numbers look good. There's a sequential recovery in terms of the EBITDA per ton. But talking about metals, let's hop across to Manisha. She's joining in to tell us about the commodity markets. Manisha?
Nigel, thank you for that. I'm keeping a keen eye on the tariffs right now because 25% kicks in from today, and we've been speaking to various segments and sectors within the Indian markets which are not very comfortable with that 25%, and the 50% that could happen in the next 21 days clearly has many of these markets very, very jittery. Well, India is one of the most heavily tariffed country as of now. Brazil is one, and Brazil only has a few commodities that are tariffed at such high price, but India clearly looking at very dire consequences as we've been talking to many of those segments there. I'll start with gem and jewelry, and you were talking to the former chairman of GJPC. Now, $9 to $10 billion of export of gem and jewelry happens to US. It is 30 to 35% of our export market, and from where the things stand right now, exports at 50% are absolutely not viable. As he said, 10% was not good, 25% was jittery, and 50% is something that they can absolutely not work with because this industry works with 3 to 4% of margins. So even as you break down those margins as in sense of they will take less profit, the consumer will have to pay more. But even with that, there's not too much happening. When you look at the GJPC numbers, the exports to US in the month of July fell by 75%. And many of the industry participants tell us that for the month of August, you perhaps may not see anything at all. It could be to zero because it's everything as at a standstill. It's not just gem and jewelry. When you look at the Indian textile numbers, well, $8.5 to $9 billion of a market is what US is for us. That is 35% of total Indian exports. And when you look at that breakdown of numbers, apparel exports to US is $5 billion and home textile is $3.5 billion. At this point in time, they say they will lose out to other markets, which is in sense of Vietnam, Bangladesh, Turkey, China, Pakistan, etc. With this 25 to 50%, India is just not competitive in the international markets. So there are concerns coming in for this one as well. The third industry I want to put on the table is India's seafood industry. So here as well, the numbers stack up to $2.7 to $3 billion of exports to the US markets. And we already are estimating something like 24,000 crores of a loss if we actually do see that 50% of tariffs come into the market. It's a big disadvantage for India. This has been one of the most growing segments in the Indian agriculture or farm industry for that matter. So this could be a big hit as well. This industry as well is seeking government support to explore alternative markets or incentives to export to begin with itself. And the final one that should come in on your screen is the rice exporters. Now, basmati and semi-basmati is what is exported to US, and that market is nearly about $42 million. So lesser than the earlier segments that we spoke about. But here as well, it is going to be not competitive. And when you look at the numbers overall, we understand that the in-transit cargo is allowed till 15th of September. But beyond that, no new cargoes, no new orders are being talked about right now. India could actually be losing its to Thailand in sense of rice and its competitiveness as well, to Pakistan as well for that matter. And trade stands suspended until there is clarity. That's exactly the line that we've seen come in from everybody. That trade is suspended, no new cargoes or no new orders are being discussed, whether it is gem and jewelry, textile, seafood or rice for that matter. There is no trade at this point in time until there is clarity.
Thank you, Manisha, for that. In fact, we're getting in Prime Minister Modi's first reaction to the 50% tariff hike, Trump's tariff hike. And his message is firm. The interest of farmers remains paramount. Listen in.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Okay, that's a strong message that the Prime Minister has delivered at a public event. I think this event was happening in New Delhi. He's spoken just a while back, and a loud and clear message going out that India is not going to compromise on the interests of farmers or, of course, people in the dairy industry as well. So it's as clear as it gets. And like Nigel has been saying, that and that makes absolute sense and logic as well, that you can negotiate, you can talk about energy, you can talk about defense, you can talk about tech transfers and all of that.
Not at the
cost. But you draw the line on agriculture, on farming and on dairy. He spelled it out. We've drawn the line. So let's...
Jeffrey's put out, they're saying that 200 to 250 million farmers or labor derives their income from agriculture in India. Yeah. And that's 40% of India's workforce, and therefore it's a strong political lobby. And plus there is also an additional estimated 50 to 60 million dairy farmers. And the influx of US dairy products can potentially cause a significant decline in milk prices in India. So we're talking about big numbers, right? Yeah. 250 to 300 million people could be potentially impacted.
Okay, talking about numbers, let's get straight to Bharat Forge. That's the company on our radar. The last quarter's numbers, well, it was plagued by uncertainty, and things are likely to continue in that direction. Going ahead, let's welcome Mr. Baba Kalyani, the Chairman and Managing Director at Bharat Forge. Good morning, Mr. Kalyani. Well, we know, I think your business has close to around 40% export exposure from the international markets. How much of it is to the United States? And you've also got a couple of plants in the United States. So what are your plans to mitigate some of this pressure with regard to the tariffs?
Well, I think, it's very difficult for any industry to mitigate a 50% tariff.
Yeah.
I mean, let's understand that. That's impractical. We've been talking to our customers. The customers understand this. They're supportive. And they all believe that there will be a political solution on the table sooner than later. So we are all hoping for that, and let's hope that this happens quickly. Mm-hmm. And because, manufacturing industry has spent almost 30 years cultivating that market, creating capability, creating the knowledge that is required to supply into highly technology-oriented markets and technology-oriented components.
Yes.
And you can't just wish it away overnight. It's just not going to happen.
Right. And just to clear out that number, sir, 40% of your business is the exports?
No, it's more than 40%, but our...
And how much is from the United States? So just help us with both the two numbers.
I'll come to that. Our exports to the US are roughly about $300 million. $200 million, sorry.
$200 million, okay.
So, and all our customers are still supporting us, so let's see what happens. But obviously, the 50% number is just undoable. You might as well not have a business to do it. But I think there will be a solution in place.
All right. So close to around 10% of your total business has exposure to the United States, very roughly, right?
Exactly.
Sir, in the interim, while there is a political solution on the table, any of your clients, customers are deferring their purchase decisions?
No, nobody has deferred any purchase decisions. Matter of fact, we had a talk with one of our biggest customers just this morning at a early morning breakfast, and even he said that we need to go ahead with the investments that we have planned to support his product launches, which are coming next year and year after next. So everybody is, supportive, and everybody feels there will be a solution in place.
So now we'll wait by for what the tariff number settles at, 25%, 50%, somewhere in the middle. But in your conversations, sir, with your customers and clients, have they shown willingness to absorb at least some of the tariff burden?
But they are right now absorbing all of it.
All of it is?
Yeah.
Okay. And even if it comes at 25%, you will be able to pass it on entirely?
The tariff, 50% is not possible for anybody.
Not 50. I'm saying it settles at 25%, just, for a number, for the sake.
If you see our last quarter's numbers, we have taken a tariff hit of about 14 crores, okay, which is roughly about $1.6 million on an export of roughly 200 million, okay? So as a percentage is 0.8%.
Mr. Kalyani, morning, sir. Two different questions for you. My first question to you is on the 200 million US business that you spoke of, that, you're doing 200 million in revenue every year from the US. As a business group, as a conglomerate, would you at all, because of all this that's happening, would you at all consider investing in the US, setting up a capacity, either in the US or in some other geographies which have got the blessings of lower tariffs? Or do you think it doesn't make sense from an Indian perspective to do that at all?
We have two factories in the US. We have, in the last 2-3 years, invested a large amount of money to set up capacities in the US. And I think we just have to now make them work at full capacities. And so we see a lot of traction there. But there are challenges to make that happen, instantaneously. I think in a year or two, this will all happen. But that is not going to replace the products that we supply from India. Those are different products.
Got it. So if at all you expand in the US, it will be additional capacities, newer products, not at the cost of the investments you're putting in India. My quick last question to you, sir, is on the defense business. Just tell us what's the trajectory ahead this year that you see for your defense business in a world where, again, India is being pressurized to buy more and more from the US, and maybe we give in to that. I mean, we've never shied away from more US defense procurement. How do you sort of sum it up?
Our defense business will continue to grow. It will continue to grow in double digits. We have multiple programs on which we are working with the Ministry of Defense. And we are exporting a lot of our defense products. We might even have some exports to the United States very soon. So that business will grow and continue to grow.
You want to give us a number, sir, for the year? Because, from a run rate of around 250, 300 crores on a quarterly run rate, you had gone to close to 500 crores. And then in the last 2 quarters, again, it's come down to roughly 270 crores per quarter.
The problem is you export guns and the number goes up. When the gun order goes down, the number comes down.
So for the year, around 2,100, 2,200 crores of defense revenues is doable?
I don't know what our defense revenue last year was. It was about 1,600 crores, right? Yeah. And I think we should see roughly about 15-20% growth on that.
Okay. All right. That sounds, I'm sure your investors are going to be very happy with that, given the uncertain environment, still expecting that sort of growth for the defense vertical as well.
Another area where I think we see a lot of growth, that is aerospace.
Aerospace. Okay. Point taken, sir. Point noted. Thank you very much for joining in. and giving us some perspective on your business. One Indian company that, of course, has its placement in several arenas, including auto components, including defense and aerospace. Well, we get back to market conversations now. The market's dipping again. It's about a 100-point cut as we speak, but it's just about 0.5%. Sunil Singhania is with us. Sunil's been waiting by patiently. Sunil, apologies, short delay there. We've just been, it's been a flurry of reactions since the morning trying to understand the implications of what this new 50% means. But your sense, on if we, let's say, manage to work through the oil tariff and the actual tariff is still 25%, is this a bit of a bottom in terms of peak negative news for the market? Does it get better from here?
Good morning and thank you for having me. So first of all, a disclaimer, we always try and be optimistic on Indian economy and markets. And I think that's played out pretty well over the last 2-3 decades, despite all the ups and downs which we have seen. I think this is also one factor which has obviously come up. I don't think we can ignore this. It's a major thing. But at the same time, it's relative. So as long as, we as a country are relatively okay compared to the tariffs on other countries, I think we should be fine. Having said that, I think the events of the last 4-5 days have been definitely not so pleasant. It's been a negative surprise. And as is expected by all, we also believe that finally, it's a question of negotiations, diplomacy, a lot of politics rather than only economics built in. And hopefully things will settle now.
But Sunil, do you think there is some amount of complacency that's being built into the market? I mean, the reaction to really bad news also seems to be such an underreaction. Even today, we're just down close to about 0.3%. Like, everyone is confident that we will be able to strike a deal, which is good for us. So do you think there is some complacency and that might get shaken up?
I think we've all grown up, reading and listening to the fox and the sheep story. And I think this is, again, similar to that. The first instance of announcements always have a big reaction, and that is what we saw in January and February and then also in April. But subsequent to that, I think every reaction and every comment has not been held on to. We have had multiple to and fro, some countries, tariffs being increased, some deferred, some decreased. It's been a complete sort of a chaotic kind of announcements. And therefore, I think maybe that is the reason why no one is taking them as seriously as the first few announcements, which were in January, February, and then April were. So that is one reason. The other thing is, I would agree that 80-85% of the concerns which we have seen over the last 1 year seems to be behind us, in terms of geopolitics. World is a little bit more peaceful than it was. India, Pakistan, and the Middle East scenario, I think, except Russia, Ukraine, which continue to fight, most of the places are pretty, I would say, stable. The world is starting to grow a little bit, except this tariff issue. And even in India, you have liquidity in our favor. There's been a huge surge. Profits are slow, but they are recovering. So I would say that except this tariff, a lot of other things are sort of from a headwind starting to become a tailwind. And once this tariff issue is sorted, I think we can see a resurgence of optimism both in the economy as well as corporate profit base. And maybe, investors are looking at that. At least we are looking at that.
Okay, so perhaps close to the bottom. That's the sense one gets. So, Sunil, in this environment, because even if, like you're saying, that, gradually once this tariff issue settles, other issues seem to be already, settling down, leave us with an outlook on how one should be looking at a portfolio from at least, let's say, a 1-year basis, because things are still very confusing. You still don't know what happens with pharma. Should you be only looking at domestic-facing stories? I mean, EMS, etc. At some point, if electronics gets hit, so a lot is still up in the air. So, where should one place bets where there's a reasonable conviction in terms of growth and then hopefully stock price appreciation?
So, yeah, I would say that at this point of time, we should not do too many changes to the portfolio because it's still a scenario where everything is not settled down completely. We don't know the final end to this whole saga. I'm very sure the end is pretty near, at least in terms of clarity. So let clarity comes. We continue to like pharma because irrespective of what happens, I think Indian pharma is the most competitive in the world. And we are not exporting, medicines at 10x the price or 20x the price, which Trump is alluding to. We are more a support function in terms of our CDMO in generic pharma space. But I would say that rather than trying to do too many, changes in the portfolio at this point of time in an uncertain environment, it is better to be patient. I know that a lot of people got very excited on export-oriented companies when tariffs on other countries were levied, and we all know what happened when the same was done in India. So it is better to let things settle down. I would say that don't make too much changes in your portfolio over the next 15-20 days. Just bear with this whole uncertainty. I know it is a time when one has anguish and one has anxiety, but it also pays to do nothing in these kind of times.
Okay, advice well taken. Sunil, thank you so much for joining in today. Really great to get some perspective from you on a morning like this, very, very uncertain times. But Rima, that's actually 2 thumbs up for pharma. Pankaj Tibrewal on the show today saying, don't get worried, stick to your pharma bets. And even chemicals, a sector that he likes. And Sunil also saying that...
Pankaj spoke about CDMO and the domestic pharma players, which I presume like the hospitals, etc., which are fairly unaffected. Okay, but that's the advice coming in from Sunil Singhania. Weather the storm for now and wait for clarity. Don't tinker around too much with your portfolio. Let's get into a break for now. On the other side is our special segment. It's The Economy. Lata will be in conversation with Soumya Kanti Ghosh of State Bank of India and Lakshmanan V of Federal Bank on the impact of Trump's tariffs on the Indian economy.
Well, the shocking additional 25% tariffs imposed by Trump is likely to see at least a 0.5% hit on India's GDP. But no economist whom I spoke with has yet revised their figures in anticipation that some deal could be reached before August 27. The current account deficit may also be hit by around 0.2 to 0.3%, some economists told me, because goods exports can fall by about $30 billion. That's to the US. The rupee is, however, steady as of now, and dealers are attributing this to the presence of the Reserve Bank as a dollar supplier. But everything is speculation. To understand more about the direct and indirect impact on the Indian economy, I have with me Soumya Kanti Ghosh, Group Chief Economic Advisor to the SBI Group and member of the Finance Commission. I also have with me Mr. B. Lakshmanan, who heads the Treasury at Federal Bank. Gentlemen, good morning and thank you very much indeed for joining me. Soumya, I'm getting figures of 0.5%, 0.6 in terms of impact. Any ballpark impact on the economy, GDP?
Yeah, thank you, Lata, for having me on the show. I think in terms of the GDP impact, we have on the 25% tariff was actually become operational. So we have actually factored in a 20 to 30 basis points decline in the GDP. The additional 25%, if we go at the same rate, which is a little difficult, a linear approximation, the hit could be actually larger. But as of now, we have a projection at GDP projection at 6.3%, which is lower than the RBI baseline forecast of 6.5%. So that's why we are sticking to the GDP forecast of 6.3%. But we may actually look into the numbers in details if the possibility of a trade deal appears a little difficult in the remote horizon.
Oh, okay. Yes, that's very, very fluid. That's the kind of replies I got when I tried to do a poll. What about current account deficit, Soumya? Immediately, there will be, that amount of dollars not coming in by way of exports.
See, in terms of the current account deficit, this year we have been looking actually at a current account deficit, which is significantly lower than 1% of GDP. So maybe in the range of around 0.5% or 0.6%. So even if suppose the current account deficit goes up by around 20 to 25 basis points, it will still be below 1% of GDP. The good thing about the current account is that in the last couple of years, the service exports have significantly caught up with the goods exports also, if not outpaced it. So from that perspective, I think that has been a positive, and that actually had a significant positive impact on the current account deficit. So on that CAD front, as of now, we are not too much worried. But we believe that the other aspects, the other components could actually make up for the loss, if any, in the goods exports.
Mm-hmm. Okay, the current account and capital flows are telling on the currency at this point in time. And let me invite Mr. Lakshmanan on that. Good morning, Mr. Lakshmanan. Thanks for joining. What are you picking from the market? The rupee hasn't moved. If anything, it's a bit stronger.
Yeah, no, thank you so much for having me here. I think the markets of today morning, beat the rupee market, beat the bond market, beat the stock market, I think are reasonably, evidencing the fact that this is another one of those shots that we've seen on every single morning over the last few months. One. Second, if I were to just reflect to you another small data point, if you just look into the FPI flows, right, over the first week of August, I think on the 1st of August, if I recall, we perhaps had more than $500 million kind of a negative. But for the rest of the days, the flows have been broadly par, to the extent yesterday's number, when I saw this morning, was actually a plus 250 million, all asset classes put together. So all I would want to say is there's reasonable evidence that market is not wanting to overreact at this stage. Very clearly, everyone would want to wait out for the conversations to happen, and then take any action. So overall, from a currency standpoint, if I were to state, the level of 88 that we saw a few days ago continues to be a strong bar at this particular point. And it's only after one more conclusive evidence of action in some fashion beyond just this rhetoric that we've seen, / any dollar currency move, which takes the dollar significantly back stronger from the dips that's seen right now, it's at about 98.
No, what's your forecast in terms of the currency?
88, as of now, as a resistance still remains, in my view. So
sorry, what remains?
88 as a resistance at the higher
resistance remains.
Still remains, and I would not want to take a conjecture at a level going higher till the time that particular level breaks, which essentially means that an 86 half to an 88 kind of a thing would remain, unless, as I stated, there are incremental actions beyond this, which mean more than rhetoric. / dollar goes up much more strongly across other currencies.
Okay, got that. Soumya, what is your sense? Should we be prepared for 88 plus 89 sometime soon?
No, I think so. On the rupee front also, if you look at the reaction today, I think the markets are now accustomed to the fact that this possibly could be the more the additional tariff which is being implemented by the US, the more it indicates that the US is actually wants to strike a deal with India on the tariff front. So from that perspective, the thinking in the market is that possibly, because no country or no country can survive within 50% tariff rate in the long run. So if that is the logic, I think the markets are now getting more attuned to the fact that there will be possibly a deal in the future, which will give some takeaways from here and there. So my sense is that the weakness in the rupee, I don't see too much significant weakness in the value of the rupee, maybe some additional 20-30 paisa movements, but overall, I think the rupee has actually run its course because the numbers on the external front still look favorable to India on all multiple fronts.
Yeah, but it is on a dime turning negative because of the capital flows. That's why I asked. And today in the chatter, people were kind of freely talking like 89 is back on the table and things like that. But Soumya, more importantly, we discussed the direct impact as about 0.5% if it went to 50, which is an unreasonable level of tariff. What are the indirect impacts? The people who are exporting to the US, the top two industries, gems and jewelry and textiles, are very labor intensive. So are there more indirect impacts as well?
I think this is a very important point, Lata. First, I think we should understand the Indian export dynamics to the US. India's overall export, if you look into it, 20% goes to the US, but India has also diversified. The top 10 basket of India is around 53% to several countries. The second in the list is the UAE. But having said that, I think if you look into India's top 10 primary exports, the first is the electrical machinery, which is a share of around 18%, which incidentally is exempt from all this tariff because that also includes smartphones. Next comes gems and jewelry, 11.5, and pharma, 11.3. So textiles, actually, the share is around 3.4%. So my sense is that there will be indeed the most important impact will be on the gems and jewelry segment and the textile segment. On the pharma segment, the interesting point is that if India were to say, for example, the Putin countervailing tariff tomorrow on the pharma products, it will actually hurt US much because the share of India's pharma exposed to US is around 47%. So, from that point of view, I think the impacted sectors will be gems and jewelry, the textiles, and also to some extent the autos where the government is actually trying to broker a deal. But the problem will be basically on the sectors which are labor intensive, where it will be difficult to strike a bargain.
So, people keep telling us that therefore we must use this adversity to reform. In 1991, the Forex crisis, we reformed. In 2013 as well, we replied with an inflation targeting framework and all that, when currency was hurt. We reform under crisis. So what is the reform we can do? And separately, should there be some packages for those who are in the line of fire, the gems and jewelry and textile exporters? Should they get some kind of, subsidy from the government?
Yeah, I think that's a very important point. Yes, we reformed. You have reformed in 1991. We have reformed also. We have been doing small incremental reforms. I think one of the first thing which comes to my mind, I think in the budget, there was an announcement that there was a policy of exports, agricultural exports policy. I think now it's the time to actually unveil the policy. Also, there has been several pending reforms which has been announced in the union budget. One of them is setting up the regulatory commission, which basically looks into all the aspects of regulations. I think that a working group has already been set up in RBI to look into all the master circulars and to prune it down. The other important thing in terms of support for the labor sectors, yes, there could be a support. If you remember, the export credit scheme was discontinued in December 2024. So there could be possibly, I mean, if it is required, there could be, and that credit, that guarantee scheme could be revived for a limited period for the affected sectors, which actually could give a lot of shy of relief. But my sense is that I think there is a lot of things to reform, and some of the small incremental reforms, even if we go ahead and do, that will be beneficial for all of us in the long term.
Okay. Unfortunately, out of time, it's an important day, Mr. Lakshmanan and Soumya. Thank you very much for quickly sparing time for us. Let us see how things pan out. At the moment, it's kind of steady in all financial markets. Wrap up on Bazaar on that note. Chartbusters coming up.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as you could see to the top of the screen, the markets are spooked by what President Trump had to announce overnight. The 25% tariff has been increased to around 50%. For the time being, the markets are still taking it in its stride. But interesting to see whether or not we can hold on to these lower levels, because the last 15 minutes, there's a fresh down leg that we're seeing. Hey, Mangala.
That's right, Nigel. You know, for the last few trading sessions, the Nifty is held on to levels of 24,500 to 24,550, rather 25,500 to 24,550, thereabouts. I'm just trying to see what happens from here on. And the Nifty Bank will be extremely crucial because that has more domestic-facing moves than, the other sectors which do get directly impacted. And then the commentary between both what Prime Minister Modi says, the Indian officials, as well as what Trump says, will be extremely crucial. The second half of this trade will be very important to watch out for. But amidst all of this, there are a lot of numbers that have been coming in thick and fast as well. So for the first management that's joining us on the show today, Blue Star, despite, weakness coming in, the numbers were in line because the street was largely prepared for these numbers. It was an unseasonal rain and a short summer. We do have the Chairman and Managing Director, Veer S. Advani, joining in to decode the quarter gone by. Mr. Advani, thank you so much for joining in. And understandably, it was a quarter that was marred by unseasonal rains as well as a shorter summer. If you could give us a sense that after all of this that has happened in the first quarter, do you still stick by your annual guidance, or do you think you will revise it lower for your UCP and room AC business?
Morning. Thank you so much for having me. You're right. It's been a weak quarter, actually a weak quarter after many strong quarters for the company. Overall, revenue grew 4% to 2,982 crores. EBITDA dropped by 16% to 200 crores and PBT dropped by 28% to 163 crores. As you rightly pointed out, the degrowth was quite severe in segment 2, which is our unitary cooling products division. Actually, segment 1, which is our B2B business, grew well, 36% revenue growth and 11% EBIT growth. It was segment 2 that got...
Mr. Advani, we have these numbers. They're publicly declared. What we want to understand is at the start of these, at the start of the year, when the summer prospects were looking fairly strong, in fact, at some time, scarily strong, so that, there would be limited supply as well for you guys. That turned around and you were targeting 20-25% growth for the full year with 8.5 to 9% margins. Do you retain that after what has taken place in the summer?
No. So we will not be able to make up all the lost business of Q1. When you have a lost summer, it's difficult to make up for the full year. But what does happen is that the second half of the year typically will be stronger than what we had.
So full year, what does your guidance now stand at as you see things for the revenue and margin, standpoint?
Yeah, so I think against that 20-odd% growth, I think we should be able to do about 10% growth. And on the EBIT side, we should be able to get to that 8.5%.
All right, so EBITDA margin guidance downgraded from 8.5 to 9% to 8 to 8.5% on the back of revenue growth lowered from 25% to about 10%. That's right?
Yes.
All right, Mr. Advani, you want to break it up for us segment-wise?
Sure. So sorry, that was about segment 2.
Okay.
Yeah. So what we're looking at is a recovery in segment 2. We will not be able to deliver that overall growth rate that we had wanted, but we do expect the festival season to be better. And as you know, there's a BEE table change that happens on January 1, 2026, which will also fuel some purchasing in Q3, and that'll go into Q4 as well. Segment 1, actually, of course, you've seen quarter 1 revenue growth very strong at 36%. I don't think that's what will happen for the full year. It will be in line with what we have been guiding for about 20% growth overall, and the EBIT will be about 7 to 7.5%. What happens in segment 1 is that you have business mix changing, right? We have a projects business and then we have the commercial air conditioning equipment business. Both contribute to that segment. In Q1, the projects business grew a lot faster, which is why you see revenue growth much faster and an EBIT drop. But on an overall annual basis, we should be at last year's level of 7 to 7.5%.
Okay, all right. What about market share? I think you had a target of 15%, right, by the end of this fiscal. That's on?
Yeah, so we closed this quarter at about 14%. If you look at GfK data, you'd have seen that even though the market has degrown, we have degrown less than the market, which basically implies that small market share growth. So that is on track. We continue to, 15 is the target, is where we've been looking to get to. We've just crossed 14, so we'll keep working hard to try and get to that number.
All right, and finally, before we let you go, on the second half of the year is where you make up for some part of the lost summer, but that also entails that you'll have to do a hard push. If you could give us a sense of what's the inventory which is lying in the channel right now, how does that compare with the usual times, and will that mean that there would be higher discounts and perhaps lower realizations for you to liquidate that inventory as we move towards the festive season?
Yeah, so we have not done any discounting to liquidate inventory. We've been quite fortunate that our tertiary sales have been strong. And so between the channel and our warehouses, we're holding about 75 days of inventory. In a normal course, it should have been about 45 days. So there's about 30 days of excess inventory for Blue Star in the field. We are confident that we'll be able to clear that out. As you know, because we're doing all our own in-house manufacturing, we were able to stop production in a timely manner, which typically you would not be able to do if you're buying. So because of that control, we are not so worried about the inventory. That should clear out. It is more about, like you said, the second half demand to recover, and we do need to push primary sales through our channel. We're quite optimistic about doing that. We're increasing market share in the north as well as holding fort in the south. So we're quite confident that we should be able to close the year on a positive note.
All right, take that point. Thank you so much for joining in and giving us this perspective. Wish you a better second half of this year as well. But let's talk about the overnight developing news, which is extremely important. The US President Donald Trump, who's doubled tariff on India to 50%, which is among the largest that we've seen in the world. Are further negotiations still on the cards? Parikshit has spoken to some of his sources in the ministry and the regulatory authorities. Parikshit, are more negotiations on the cards?
Well, the fact that the 25% additional tariff will come into effect only after 21 days, this, according to our sources, indicates that the time period has been given for negotiations. Purchase of Russian oil, according to sources, is perhaps not the only reason why India is being penalized, because China is a big buyer of Russian crude oil and fossil fuels. It is the biggest buyer of Chinese fossil fuels since 2022, even before the war began. What India will try and do is to negotiate a settlement, some sort of solution within the next 21 days within the larger bilateral trade agreement. So whatever solution we have is not going to be outside the BTA, it will be within the BTA. Also, when it comes to purchase of US oil and Russian oil, Indian oil PSUs have been purchasing crude oil from all over the world based on market conditions and the best pricing available. Similarly, from the US, we have been seeing how oil imports from the US have significantly gone up in the last 6 months in the range of 114 to 120%. And this is because the Indian companies want to diversify supply and they found the pricing attractive in the US as per their own strategy. We're also learning from our sources that we have to take a long-term view of the India-US partnership. This is a partnership where we've invested a lot in over the last few decades, and this partnership cannot be derailed because it has a strong political tone, there are very strong people-to-people ties, and very strong business-to-business ties as well. So our effort would be to find a solution within the next 21 days, even as we try and strengthen our exports to other markets around the world.
Thanks a lot for that, Parikshit. We'll keep coming back to you with regard to the latest that you're picking up. For the time being, we'll slip into a short break. On the other side, we'll be joined by Mr. Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare. Stay with us. Welcome back. You're tuned in to Chartbusters here on CNBC TV 18. As promised, let's get chatting with the management of Fortis Healthcare. The company reported a strong set of numbers. The profits jumped up by 57%. The margins expanded to 22.6%. To help us out with the quarter gone by, we're joined by Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare. Hi, good morning, Mr. Raghuvanshi. Thanks a lot for joining in. Well, let's get a couple of details out of the way. What kind of occupancy are you looking at? How do you see your case mix shaping up moving ahead? And also the average revenue per bed. These three numbers, if you could help us out with, the broad range will do.
Good morning. Thanks for having me. So the quarter has been good. We had about 69% occupancy during the quarter. We expect this to go to 72% over the next quarter and improve from there on. As far as ARPOB is concerned, that is a result of the case mix, as you asked. And what we have seen is that our growth in some of the high-end specialities has been much faster than the core specialties. So oncology segment, for example, has grown very fast, and it is one of the largest segments for us now. And there, the realization is typically higher, and that has led to a higher ARPOB. So we expect that our momentum of both occupancy as well as ARPOB growth will continue, and that should result in better outcomes in future.
All right, better outcomes in future on the top line. I'm looking at your margins. They improved as well, and you've given a guidance of holding on to these margins between 22 to 23% for the entire year, led by both your diagnostics business as well as your hospital business. What I want to understand is that there are a couple of underperforming properties as well that you have, Jaipur, Vashi, etc. Do you plan to, hive them off in your margin guidance? Is that baked in as well? Because you recently did sell the Richmond hospital.
No, at present we have no plan to hive off anything. Most of these facilities which were underperforming, there were 4 facilities which were underperforming. 2 of them have turned around significantly, and the 2 you mentioned, Vashi and Jaipur, have still underperformed. However, there are signs of improvement in both these units, and we believe there is a potential in these units, especially Jaipur, where we are looking in terms of adding additional capacity and also adding additional modalities like oncology, radiation therapy, etc. And with those facilities, we expect that this hospital has a great future potential, and we expect to persist with these.
So this margin guidance that you've given us includes the possible turnaround, or that could be an additional bonus if that happens?
No, that would be additional. We are currently talking only about the current performance.
And how much would that additional bonus be? 50, 100 basis points?
We expect it to take more than a year, so I don't expect that to contribute this year, but certainly the next year.
Okay, all right. Mr. Raghuvanshi, a quick word on, on your debt number. Where do you see this one stabilizing at? And also, if you could help us out with plans for an IPO. In the past, there's been a lot of to and fro, Agilus. Do we hear something about it sometime in this fiscal year?
Yes. So as far as our debt status is concerned, EBITDA to debt ratio is about 0.93 at the moment. We believe this is a comfortable ratio, but we don't expect it to go up from here. It may marginally go up during this financial year, but it is expected to come down by the end of this year. Most of our brownfield expansion, which we have about 900 beds getting added during this year, is coming from internal accrual. So that way, the debt situation is pretty stable, and I think this is a peak for the moment, and we expect it to come down from here. Now, as far as Agilus is concerned, you would have seen that the performance has improved, but it was lagging for past few quarters. And this quarter, there has been a growth both in terms of volumes as well as in terms of ARPU. That's why the bottom line is better. So we expect that trend to continue. We are focusing on improving the performance of the diagnostic business. We are rationalizing the lab networks, etc.
Are you doing an IPO, Mr. Raghuvanshi? Are you doing an IPO for Agilus?
We will do that at the right time. It is not in the works at the moment.
All right, take that point. Thank you so much, Mr. Raghuvanshi. You are not ruled out that possibility, but definitely not happening in the very near term as well. Wish you good luck for the remainder of this year on the operational front and the case mix and the RPOB improvement that you've spoken about as well. The street likes your numbers. The stock up nearly 4% in a weak market. Take a short break, get you more on the markets and a lot of stock-specific action. Welcome back. The market still continues to reel under a bit of pressure. The mid-cap index, at one point was in the green, but now currently at the low point of trade for the frontline indices, the Nifty Bank, as well as the mid-cap index, all of them come up for you. The Nifty, remember, was poised for some support around the current levels that we were at. But now if it falls further, then maybe, we'll keep an eye out on whether we see further decline from here. 24,350, 24,400 thereabouts. Important technical supports coming in for the index as well. Just pull up the dollar index to see, or rather the rupee dollar, to see whether there has been an impact on overnight news that has come in on the currency as well. My sense is that the rupee opened slightly weaker, and now currently as we speak is hovering around the 87.7 mark itself. So we'll monitor all these things as they come along. It's not just a today or a stock specific market, perhaps a lot more to do with the shift in strategy that takes place as well. While that happens, let's get you a few ideas for profit. Our colleagues from Money Control Pro joining in. Lekha is the one who has a stock she's tracking.
Yes, sir. So we like Vijaya Diagnostics, which recently reported a strong Q1 results, beating market expectations. Now, despite concerns over margin pressure from the new centers, Vijaya maintained a steady EBITDA margin of 39.1%, supported by 20% revenue growth. This performance was driven by increased footfall and test volumes, which were up 15% and 17% respectively. Our radiology segment accounted for 39% of the revenue mix, which was its best contribution so far. This led to an improvement in the revenue per test by 3%. Also, quick ramp-up of new centers and ongoing growth in the existing ones provided strong operating leverage and supported the margins. Talking about its expansion plans, the company commissioned 5 new centers in Q1 and plans to add 7 more in FY26. Vijaya has also fully integrated the newly acquired PH Diagnostics in Pune and is expanding well beyond its home market. The management projects 15% top-line growth in FY26, driven by volume growth and modest price hike, while also maintaining the margins. We believe Vijaya is well positioned to capture significant market share in the underserved regions. The company's strong growth strategy, focus on tier 2 cities, and the recent PH Diagnostics acquisition should drive earnings accretion going ahead. Currently trading at around 29 times FY27 estimate EV/EBITDA. The valuation is slightly above the historical average. However, Vijaya's robust outlook and expansion plans suggest potential for further stock upside.
Well, interesting one. Lekha, thanks a lot for joining in and giving us that update. But we have completely run out of time on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
Hello and welcome to Trading Hour live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always as Hormis Patakia and Reema Tendulkar. Well guys, a lot happened last evening, right? And we've been discussing it since morning. But you know, we started the morning where the markets were like, okay, we're shrugging off most of the concerns, but now we're seeing that sharp cut that has come by on the Nifty. It's a 150-point downtick on the Nifty currently. It's below that 24,450 mark as we speak. And that's an important
important level to watch out for as well. Mid caps not doing well, but in line with what the benchmarks are doing. That index is down 0.5%. We have Bank Nifty, which is sitting with cuts as well. And largely these export-oriented sectors. We have Nifty Metals, Nifty Auto. These have been big drags. Nifty Energy, that continues to be on our radar as well. All of these extra tariffs have come in because of oil that India is procuring from Russia. A lot of it we'll be watching out for because we still have the 21-day deadline, and that is where the 6th round of negotiations with the US will start as well. But for now, markets are taking that sharp turn lower as we speak, and it remains to be seen which way things go as far as trade talks are concerned.
So it's 24,422 on the Nifty. We've breached the 100-day moving average on the way down, which was a level of 24,450. So now well below a lot of the support levels. Technical analysts were pointing out that how the 24,450 mark was an important support, and that's gone. As Sonal pointed out, we started off with a fair degree of resilience, but now weakness is seeping through. I guess the two sectors which are relatively unaffected, they're in the red right now, but not with deep cuts. It's IT and FMCG. And in terms of individual frontline stocks, it's Hero MotoCorp, that's up close to about 0.7%, Power Grid, HDFC Life, some small odd pockets of green today.
Indeed, we need to keep in mind that today is also the weekly options expiry. And before we carry on with the show, let's go across to Parikshit now, who is in an exclusive conversation with Rajiv Bajaj, the Managing Director of Bajaj Auto. Bajaj Auto posted a revenue growth of 6% year-on-year in Q1 FY26 at 12,584 crore rupees. The company's exports, premium motorcycle sales, CVs and Chetak delivered double-digit growth. The company delivered an EBITDA of rupees 2,500 crore and profit after tax of 2,100 crore. Bajaj Auto and TVS Motor Company have been leading electric two-wheeler sales, followed by Ola Electric. But the big issue and hurdle for the EV industry has been the rare earth magnet crisis, and now the industry will also have to face tariff uncertainty. There are US-India trade tensions, but that also has a ripple effect on tensions all around the world. Joining us now to discuss Bajaj Auto's trajectory here on in this uncertain environment is Rajiv Bajaj, the Managing Director of Bajaj Auto. Mr. Bajaj, thank you very much for joining us. Let me begin by asking you first about the US tariffs. An additional penalty of 25% coming in 21 days. If we don't have a solution, the tariffs would be 50%. How bad is this for the Indian industry overall?
Hi, Parikshit. Well, I don't know about the industry because every company's situation is specific to itself. For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business, and I'll tell you why. In any case, from around this time, from August, September onwards, exports to such markets, including the US, do dip because goods will only reach there, by November or so, by which time the winter sets in. And demand, turns down significantly. So, in any case, the next 3-4 months are the weakest months as far as exports to such advanced markets are concerned, which means we have time to rejig the supply chain until almost December or January, when we will start again exports for the spring and summer season, and therefore. We have many options, whether we continue exporting from India because there is a rethought on the tariff, or whether we go via facilities that are in Europe or in Asia, such as Thailand or somewhere in LATAM. There are many possibilities. So frankly, we are not impacted significantly, and we are not concerned.
Right. I would also like to ask you about how the global tariff situation is impacting your exports, and do you expect a hit in FY26 because of the sentiments and the uncertainty globally?
Not really, Parikshit. I mean, in a word again, or in two, I would say I don't see any impact. You know that post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with pulsars and dominars, it's a very rewarding market for us. Really, the single sore point that remains is Nigeria, that used to average 50,000 motorcycles a month and is still hovering around 20,000. So with the exception of Nigeria, for motorcycles and some markets like Egypt for three-wheelers, where three-wheelers are now currently banned, really our export markets have come back strongly. And I'm actually quite hopeful that if this trend continues, it may not be long before we are back to that level of 200,000 a month.
Right. Just to speak about the rare earth magnet crisis. In April this year, you had said India's EV industry could come to a grinding halt due to the rare earth magnet restrictions by China. What would be your outlook now, as China has not lifted the restrictions for India still?
Well, that is still a very, very uncertain situation. I must say this, every day is a new day. Again, it's a very company-specific situation, Parikshit. For us, as you are aware, that in the first quarter of this calendar year, the Chetak became the market leader in the electric scooter segment. And in the recent Q1 of this financial year, our electric three-wheeler, the GoGo, became the market leader in that segment. So what I'm trying to say here is that our volumes are quite high. We would like to do typically 30,000 Chetak a month and in excess of 10,000 electric three-wheeler a month. So for a high volume player, there is a big impact because we don't carry the kind of inventory in number of weeks or months that a low volume player would. And therefore, the immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. So where else in the world can we source these from? And finally, I think all of us are working towards ferrite magnets or solutions that have no rare earth at all. So I think that is the roadmap ahead of us.
Right. What has been the cost implication of this to get low rare earth magnets? Have you had to do re-engineering?
Yes, of course. You have to incorporate certain changes in fundamentally your motor design to be able to operate at temperatures that are conducive to maintain performance, to maintain reliability with low rare earth. So fortunately, the R&D has really been working through the day and night on this for the last several weeks. And they have solutions in place for both the Chetak and the GoGo. And therefore, even as we speak, we are producing now with low rare earth magnets.
Right. Now, to what extent is the rare earth magnet crisis impacting your deliveries? In quarter one of FY26, what was the impact in percentage terms? And what is the kind of impact you expect in quarter two?
As things stand today, I must again say this is a very uncertain situation, and tomorrow I could have a different answer. As things stand today, first of all, in quarter one, we had almost no impact because the inventory that we were carrying between ourselves and our suppliers has seen us through in Q1 largely. And for the whole year, also, I think we will not have impact. Now, more specifically in July, as you know, with the Chetak, we were at about 50%. With the three-wheeler, we made it to about 90%. I think we made 8,000 of the GoGo electric three-wheeler. I had said a couple of weeks back that I see us staring at a zero production month in August as far as electric vehicles are concerned. But I'm happy to say that, as I just mentioned, things have changed a lot in the last 2 weeks with the availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the GoGo is concerned. Things stand today. For the month of September, actually, we should post our highest numbers ever, again, as things stand today. But we will still fall short of demand only because, demand is really high next month, anticipated to be very high because of the festive season. So today, if I have to hazard a guess, I would say something like 40,000 electric scooters, that is the Chetak, and well over 10,000 of the GoGo electric three-wheeler in September is not out of the question if the LRE magnet supply continues as it is continuing today.
Right. So if we were to ask you about the full fiscal, would you trim the production outlook, or you would say you will remain on track despite the crisis?
Neither of those two. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. And in fact, the reception is so good. As I said, both these brands are market leaders in their segments. So in fact, I think we will hope to make and sell more in the second half of this financial year than we had anticipated at the beginning of the year.
Right. So if I could ask you, sir, what is the kind of overall numbers that you're looking at for the full fiscal in terms of production and the growth over FY25?
That's hard to say, Parikshit, because again, it's very, very uncertain, so it can get a little hypothetical. But I will tell you this, that in terms of capacity, we've pushed it up to 40,000 for the Chetak, and in anticipation of future launches, we are moving it up to 60,000 in the next few months. And for the three-wheelers, I think I would be right in saying we are pushing to 15,000 a month. We'd like to go even higher because although we are market leader, we are still a shade under 40% share. With the ICE three-wheeler, as you know, we have close to 80% share. And that's certainly our goal that, why shouldn't we have 80% share in the electric three-wheeler segment as well?
Right. In terms of more launches, what about the EV electric scooter plans? Are we going to see more variants of the Chetak at different price points, electric motorcycles, other EV products?
A bit of everything, actually. So as far as the scooter segment is concerned, as you know, we exited the ICE segment nearly 20 years back. So this is a segment in which we had to, we had a fresh start. So we started with the new avatar of Chetak as the electric. I think to answer your question, various SKUs of this platform at various price points, that's been done, I think, quite effectively, which is why we acquired leadership. Of course, more of the same will continue to happen, but we need to launch a new platform, which quite frankly, we would have launched in this quarter. We have deferred that now to Q3, possibly even Q4, as in January. It all depends on the availability of magnets because, as long as there is some constraint, we want to keep making more of what is obviously currently selling before we introduce a new product and make life even more difficult for ourselves in terms of additional demand. As far as three-wheelers are concerned, unlike with the scooter, this is where, as I said, we are 80% ICE share. We are the market leader. We are leveraging that leadership, or we have leveraged that leadership with the GoGo. And I think we are going to take it further. I anticipate you asking me a question on our e-rickshaw foray. And again, we are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. And as we have done with the GoGo, we'll build it up slowly. We will wait a quarter or 2 before we scale it up because, again, we need to get the product absolutely right. We are still, making our way up the learning curve. in all respects of technology, product, and customer service as far as electric technology is concerned. So the scale up will be gradual, but we are going to be in the market from this month. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share a first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader.
Rajiv Bajaj there in an exclusive conversation with Parikshit, and the conversation continues. But we take a short break. Just before that, the market, though, has now slipped to the lowest point of the day, 160 points down on the index, now 0.6% lower. Of course, we need to keep in mind today is also the weekly expiry, so that also has a factor to play. The Sensex is down almost 500 points as we speak. We take the market conversation forward on the other side, but we also put the spotlight on the crypto sector in our new special offering, Coin DCX's Sumit Gupta speaks to Manisha Gupta on the other side. Stay tuned.
CNBC TV 18 presents Crypto Corner, powered by Coin DCX.
Welcome back. You're still tuned into Trading Hour. Cryptocurrencies are steadily moving into the financial mainstream, and a growing number of investors are eager to understand where digital assets fit in the broader investment landscape. In our special offering starting today called the Crypto Corner, CNBC TV 18, in partnership with CoinDCX, aims to simplify crypto investing for the viewers by decoding the latest trends. In our inaugural episode, Manisha Gupta spoke to CoinDCX co-founder Sumit Gupta and began by asking him on how Indian investors view crypto.
See, over the last 18 months, I have seen crypto becoming a very integrated part of an individual's portfolio. From the modern portfolio theory, people want to sort of maximize the returns, risk-adjusted returns, and crypto is an asset class that fits very well there. Of course, the percentage depends upon risk appetite, but I have seen that a lot more sophisticated investors are now seeing crypto not as a speculative asset, but rather a very important asset in their portfolio. And from that point, I think the data also suggests that we were checking the data on our platform from the last year to this year, H1. We have seen a 24,000 crore increase in trading volumes, roughly 40% of that. And overall, when you look at what is the holding period of an individual, it also tells us that people are now looking at Bitcoin, Ethereum, or the top blue chip crypto assets as a long-term holding asset rather than a short-term.
Investment rather than short-term trading. Sumit, also, what are the various kind of investment options that are available within crypto right now? Because for the longest time, we've spoken about buying and selling, and then it has been about yielding. People are also leasing their cryptos. Are Indians apt and doing that?
I think people who are doing investment in crypto assets are now evolving more to different instruments. I think just like how we have in stock markets, here you can do SIP. So you can start with as low as like 100, 200 rupees, do a weekly SIP investment. People who don't know when to get in, and what is the frequency when to buy. So SIP is there, simple buying and selling is there. People do trading as well outside their trading hours when the stock market closes. People now move to crypto and then
it's a 24-hour market.
It's a 24/7 market. It's more exciting, more volatile. People love it. Traders love it. People are also doing derivatives, in crypto assets. That's also emerging. And people are doing yield. For example, if you have Ethereum, so you can stake their Ethereum and get 5% yield on that.
But what percentage of Indians are actually doing that or understand that?
It's increasing very fast. So on our platform, I would say roughly 10 to 12% of people, of investors, use these kind of different instruments to maximize their returns. But that number is increasing pretty rapidly.
Sumit, why would you say that the interest in this space is increasing? Is it because of US, because we've seen very strong legislations come in from there? Or is it because of the returns that you see? Or people really do think that crypto now is a strong portfolio diversifier?
It's a combination of multiple things, Manisha. I think so many things are coming together at the same time. We have seen increasing regulatory clarity, so many discussions happening in the US. It's not like, just one other topic. It is actually the prime topic of discussion when it comes to financial landscape in the US. Bitcoin price has essentially demonstrated that highest ever inflows, Bitcoin being the most successful ETF ever. There is mainstreaming happening. So many people are talking about it because when price goes up, people start to read about it. It just triggers their curiosity. And when people read about it, they build their conviction, which creates a ripple effect. So I think everything is coming together, which is going to make it mainstream.
What is the investor profile right now? Because earlier it was only about enthusiasts and then people who wanted to try something new. But now we do understand that it's corporates, it's institutions, investors, even HNIs or family houses in India also seem to be getting into this.
Oh, yeah, absolutely. I think so I've been into this space for almost 8 years now. When I was starting, it was mostly young, geeky people who sort of want to do ICOs and, this white paper came and let's just read it. But now it's a lot more serious. I get like messages from our VIP customers. We have a Prime offering, CoinDCX Prime, where all the HNIs, Ultra HNIs can reach out and we handhold them. We've seen massive activity there. In terms of the average age, it used to be 25, 26 back then. Earlier, it used to be 21 and then 25, 26. Now it's like 30, 28 to 35. We are now floating in that range. People who are either working professionals, people who are doing businesses, they are now getting more and more aware and they also want a piece of the pie. They want to have like 2%, 5% Bitcoin in their portfolio. No one wants to miss out.
Oh, absolutely. And those are all opportunities, by the way. But Sumit, let's focus on the challenges as well. And What is it that you would say a first-time investor should know about crypto? Would you say Indians are now getting used to those higher taxes? And then there are, of course, challenges because of the kind of volatile moves that crypto puts forth.
Look, Manisha, crypto is volatile, it's risky, and that's the reason why returns are higher than other asset classes. People need to think beyond hype. People who are thinking to invest in crypto should not look at it as a 5x or a 10x multiplier, that they'll put X amount and it will suddenly go 5x. I think we've gone beyond that. Now it's more moderate. Volatility has reduced what it was 3 years back.
Right.
Yeah, I mean, like there are millions of tokens, but important to restrict it to only quality assets that have demonstrated their potential over several years now. Anyone who is starting new, I think the general advice is start small, understand, learn about it first before you just directly put your money.
Small is what, 2% of your portfolio?
I think it depends. People have different researches. I think people have said like 2 to 5% of a portfolio gives the highest Sharpe ratio, which is like risk-adjusted returns if you want to maximize that. So yeah, I mean, people can start with 2 to 5%. Of course, some people are more bullish like me. I have a much higher percentage allocation to crypto assets. But I think for a general investor, I think they can start small, and as you learn, as you get more comfortable, then basis your risk appetite, increase your portfolio. And when you are starting, just understand that it's a risky asset, it's a volatile asset, so only invest what you feel you can afford to lose. And then when you are really educated about this, the technology, the category, then basis your comfort, you can increase it.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Now, at the core of the US-India tariff tensions is a long-standing demand from Washington. US wants greater access to India's agricultural and dairy markets. And this push has come up in every trade negotiation. And in a way, it was a deal breaker for why we haven't struck a deal so far with the United States. But India's position has been firm, even now as we are slapped with a 50% tariff. In fact, speaking at an event earlier today, Prime Minister Modi said that he remains focused to protect the Indian farmers' interest. Listen in to Prime Minister Modi's first reaction to Trump's tariffs.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Very firm response coming in from Prime Minister. He stands behind India's agricultural and the dairy market. But let's get in a market opinion now. Markets are slipping. We're down close to about 150 points on the Nifty. Prashant Khemka, founder of White Oak Capital Management, is with us on the show now. Prashant, hi. Thank you for joining in. You know, we just spoke last week on Editors Roundtable, and at that point, it was unfathomable, right? A 50% tariff. A friend would become a foe. But now, as we're dealing with this reality as it is right now, it may change tomorrow. How are you dealing with it? What are your initial thoughts on how this is going to play out?
Certainly, Rima. Good to see you. He is, as we discussed at the roundtable as well, Trump is, by design, by his choice, unpredictable. So let's first of all agree that it is not possible to predict where it would all settle. I think India is reacting in a very responsible manner with the patience that India has shown in not rushing into any kind of a trade deal. Because even if you strike a trade deal, there is no saying that Trump will stick to it. He can always come back and, like if we had struck a deal a month ago, he could have always come back and because of Russia importing the Russia oil import, he'll impose additional tariffs on what is already agreed upon. And there's no, you can't, argue with someone who, openly can defy logic at his whims and fancy. So I think the only thing we can do is wait. In my assessment, having said what I just said, it is his negotiating tactic. If you look at his past pattern, he generally jacks up his rhetoric and his tweeting with some such measures as they imposed on India, with other nations as well when they're close to reaching or they are in final stages of negotiation. Here he's trying to hit two targets with the same arrow. One is the Russia negotiations that they're having in the midst of related to Ukraine war, as well as the India trade deal. So I think it's very convenient and it is predictable. At least I think it's become somewhat predictable of Trump that close to final stages of negotiation, he ratchets up his rhetoric and such measures. And hopefully, as and when some kind of a deal is finally settled, my assessment is that final tariffs will be well below the 50% and hopefully would be well below the 25% initial tariff measure as well.
So if once and when we see the final deal as well, Prashant, considering that it is below 25% also, do you think there could still be some sectors which could be at risk? We spoke to a lot of textile companies today. The gems and jewelry sector spoke about how it could be a big hit if it does come about. Do you think below 25% as well, these sectors are at risk?
Those are the sectors most at risk, Sonal, that you pointed out, particularly, let's say, textiles. We are competing with nations like Vietnam, Bangladesh, and to somewhat lesser extent other South Asian countries and even Turkey, they are all in the teens, mid-teens to high teens or 20%. Yeah. So for us to be presently, as you're showing, 50% certainly renders us uncompetitive in a business that is very cutthroat and margins are slim and returns on capital are slim. But even if it is at 25, even a 5 to 7% or 10% incremental tariff would impact that sector because of the competitive levels in that sector. So either the government would have to step in with some additional support measures for that sector, or the final tariffs would have to be lower than the 25% announced for the textile garmenting sector to not feel the brunt of the competitive hit.
So in that light, Prashant, does the portfolio tilt acquire a more domestic oriented theme now that because of this uncertainty with the textile names, the shrimp feed names, a lot of these exporters being under the radar, does the portfolio tilt acquire a more domestic oriented face, say for the likes of the consumption names and so on and so forth?
Sure, Hormuz. I think it is possible that for incremental money you can do that. If you're putting, whether it's fund managers like ourselves or even individual, I don't think there's benefit to be gained by making U-turns in the portfolio or right turn, left turn, or whatever turn spaces in the existing portfolio, such macro news. I haven't seen anyone make. Maybe I'm wrong, but I haven't found myself a way. Our team hasn't found a way, nor have we seen anyone make consistently any money other than the brokers when you churn your portfolio so much. But yes, on incremental money, if you want to wait out the uncertainty, then it may make sense to be more domestic oriented. But as and when the final deal is out and it settles much lower, then you run the risk of being in the wrong place again. So we always keep a balanced portfolio, meaning we have a good measure of portfolio that is exposed to domestic, a large portion. In fact, the vast majority of the portion of the portfolio is exposed to and invested in domestic opportunities and has always been, not just right now. And there is a decent amount of exposure to export-oriented companies as well. Not only, first of all, IT services doesn't get impacted by all this, but services are out of the ambit, right? So there is a decent amount of exports-oriented exposure in the portfolio. We at least are not changing the mix in any manner.
Prashant, this China Plus One was also seen as India's big opportunity to gain from global supply chain diversification. Whether it comes to EMS companies, electronics, auto components. Now, given that India's position may be a little unfavorable versus some of the other peers whose tariff is currently lower, does that derail the entire strategy and the value proposition for investing in auto components or EMS companies?
No, I don't think so, because those are far more structural decisions that global corporates make from a decades perspective rather than weeks or months perspective. I don't think anyone believes this 50% tariffs are here to stay for good. I mean, even if you assume that Trump sticks to them, Trump finally is only 3 years or 3+ years left. That's a long time, I know, but still, I doubt these are factors that global corporates would cause global corporates to make a U-turn. Yes, on the margin, maybe people would go a little slower to see where things settle. But remember, there aren't many alternatives for China Plus One in some of the sectors. India, given its abundant workforce and the huge size of the domestic market, is a natural or a strong, I won't say the only alternative, but a strong alternative. So what you're saying, Rima, is true. If this uncertainty sustains for a very long period of time, it can slow down that decision making. But I don't think that reversing, because corporates worldwide have the tariffs, if anything, have demonstrated very strongly that your supply chains can't be dependent on one country or two country or a specific geographical area. So that diversification anyways would continue from China. and India remains a very strong alternative.
Okay, so even if our tariffs are between 20-25%, we're still a very stable, reliable alternative to China. Prashant, in any way, do you think markets are being a little too complacent about this tariff threat? What is your own opinion? Because every time, it just seems like a bit of an underreaction by the markets.
I think, look, if you see in April, when Trump first announced early April the tariffs, hardly any of those have panned out the way he announced. Yeah, most of them have been curtailed down. Yes, India has gone the reverse way, but given the experience that the market has had over the last 3 months, market, I think right now is appropriately assuming that these tariffs on India would not stick, first of all. That. Secondly, if the tariffs were to stick, yes, there would be further potential downside for economic growth expectations and corporate earnings expectations and whatnot due to the economic growth. The direct hit of tariffs is going to be only on a few sectors which are very small from a market perspective or the index perspective. But if the tariffs were to stay at 50%, maybe it could cause some hit to the economic growth. And that could have impact on broader other sectors as well. And that could be few percentage points further on the market. It's not a development that would cause, in my view, a double-digit kind of decline on its own.
The primary reason why the markets also went down, Prashant, could be attributed to earnings, right? We went down from 26,000 plus to sub 22,000 after the second quarter results last year. And this quarter as well, barring a few names, has been nothing much to write home about. Do you believe that this earnings disappointment is here to stay for another couple of more quarters before the low base kicks in and we start seeing some improvement? Or this was possibly the last of the sluggish earnings period that we have seen?
Very hard to say almost, but I think most corporates, what little they know from what they see in their end market, they are suggesting that another quarter or two of sluggishness is there. However, having said that, in my experience, corporates always say, when in a downturn or in a sluggish environment, they always say a quarter or two of sluggishness, and then we see markets picking up. They have no clue beyond 6 months themselves, but that's what everyone is saying. So everyone else is also saying the same, towing the same line. One has to almost also keep in mind this year's somewhat slower growth is on the back of very strong growth that we've seen after COVID, post-COVID. So 18-20% kind of CAGR we saw for 4 years is not sustainable over time. We have grown low double digits in earnings growth. So in a way, this year is a year of normalization. And going forward, we believe earnings growth should be in line with nominal GDP growth rate of low double digits, 10 to 12%.
Okay, so you rightly pointed out nobody has any idea beyond 6 months. It's been quite volatile and we really don't know what happens with the commentary coming in from the US and President Donald Trump as well. Always a pleasure speaking with you, Prashant. Thank you so much for joining in today with your views on what's happening with the global picture and Indian economy as well. Time for a short break now. Management of Jindal Stainless will join us next to discuss their quarter one numbers and more.
Welcome back. In conversation now with the management of Jindal Stainless with good sequential improvement in margins during the quarter. Tarun Kumar Khulbe, the CEO of the company, is now joining in. Mr. Khulbe, thank you for sparing time and joining us today. You know, the first question has to be about the overnight developments, right, with regards to the tariffs on India from the Trump administration. How much of your business relies on exports to the US? If you could share that number. And considering this action, if it is a significant number, do you see that now trending down considering the recent developments, or you're hopeful that things would turn for the better in the near term?
Thanks always, first of all, for inviting over here. And so this tariff in US, this is definitely a hot topic for the discussion. But if I talk about our industry, that is stainless steel and steel, here the tariff comes under Section 232. And these tariffs were already, they have come in two tranches. The first tranche was in 2018 in March, where 25% tariff was given. And then in this year, last month, June, beginning of June, around 4th of June, another 25% was put the tariff on the steel and stainless steel. So already our industry is having a tariff of 50% from the last month itself. Now,
yes, go ahead.
Yeah, and now if we look at from the market perspective, US, if we look, they are a net importer so far as stainless steel is concerned. And we believe that immediately ramp up of capacity there also would be taking time. So their market is also going to change, the pricing and all in their market. But so far as we are concerned as a company, I will say that we are a lot domestic focused company. Our markets are doing well. Here the demand in the domestic is pretty well. And we are continuously focusing on it. And the balance, we are balancing the exports as a balancing number. So US market, otherwise, in terms of while it is important, and we consider that to be important, but in terms of volume, it is not so significant for us. And that is why we are able to constantly give the growth, and we are able to keep our commitments of the volume growth, what we have given to the market. And we are confident that whatever the guidance we have provided, volume growth, we will be meeting that.
So, Mr. Khulbe, just confirming, your exposure to US is very minimal. Can you quantify that for us? Is it low single digits? Is it high single digits? Because around 17% of Q1 FY24 revenues came in from exports. So, just wanted clarity on that. And when you say you'll be able to maintain your guidance for FY26, what is the volume guidance that you have for FY26? Q1 did 9% growth in terms of volumes. What will you do in FY26?
Okay, so Sunil, over a period of time, like you mentioned, FY24 Q1, the markets have changed, the demand supply situation has changed, everything has changed over the last 2 years. So many rulings have come and trade protections everywhere, everything has changed. So I think that number we should not be considering. To answer your question, you're on it is on the lower single digit. But as I said that, we are pretty focused on domestic. Domestic markets are doing fairly good, and our demand is well. And we have provided a guidance of 9 to 10% over the last year for the annual guidance. And that annual guidance, we believe that we are sticking to that, and we feel that we'll be meeting that.
Okay, so 9 to 10% volume growth for FY26, exposure to the US, exports to the US in low single digits, and you're already faced or slapped with a 50% tariff. So there is no incremental headwind. And this 50% tariff happened in the month of June. What about realizations? How are prices today versus Q1? What is the number? And even for EBITDA per ton, how are you likely to trend from here on, sir?
So EBITDA per ton, Rima, also we had provided a guidance of on a console basis 19 to 21,000 rupees per metric ton, and on that we have already performed in Q1. So far as prices are concerned, let me put it like this: that in the stainless steel, always we have been saying that prices are a factor of the raw material movements, and so far as Q1 prices average and current prices are concerned, because in the raw materials not significant movement, so prices are also have not moved much. They are at a similar level, but again I'll repeat that our price movements are mainly with the movement of the raw material prices.
So, Mr. Khulbe, now talking about the other one, Jindal United Steel, you've been going around about a 200 crore a quarter EBITDA run rate. Do you expect that to sustain for this year, or do you see some more incremental upside to that number?
So, Hamed, this Jindal United Steel, JUSL, first of all, let me just put it again that this is our 100% subsidiary and of JSL. And this company essentially runs on a job work model. And because our volume growth is there, and already I have confirmed that whatever volume growth guidance we have provided, and we are sticking to that. So aligned to that, JUSL EBITDA is also moving. So yeah, I think we should be hitting the similar number what you have just mentioned.
Okay, last question before we let you go, Mr. Khulbe. What is the capex spend in Q1 that you did, and what is the targeted debt that you will be looking at, considering the FY26 capex number as well?
Okay, so our targeted net debt is around 35 to 3,700 crores. This guidance we had given, which in the beginning, at the end of Q4, it was around 4,000 crores. Capex guidance we have provided for this FY26 is 2,700 CR, and in Q1 we have done 665 crores capex.
Mr. Khulbe, we leave the conversation here. Thank you very much for joining in. For the markets, still down about 150 points. It hasn't incrementally fallen since the start of the show, so 0.6% down. I think mid-caps, the position has gotten a little bit worse, so 500 points down on the mid-cap index. That brings us to a close on Trading Hour. From the entire team, thank you for watching. Don't go anywhere. Halftime report is up next.
Trump's decision to hike tariffs on imports of Indian goods to the US from 25% to 50% hurts sentiment, with investors hoping for an early resolution of the differences. Metals, auto and energy are the big drags.
Eternal sees large block trade of 5,600 crore rupees, with Antfin likely to be a key seller exiting the stake in the company, while Kotak Mahindra Bank too sees a prominent investor selling shares worth around 2,000 crore rupees via block deals.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
Sources tell CNBC TV18 that India is looking to use the 21-day window before the additional 25% tariffs kick in to try and negotiate a solution. This even as the Prime Minister states India will not succumb to pressure and compromise the interests of its farmers following Trump's raising India tariffs to 50%.
Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units